See here. All right. Wait a minute. Perfect. So, yo, what up for y'all on the YouTube replay? Hope you're having a great Sunday. Let me start this out with a quick portfolio update, and most likely we will be doing another live stream later tonight when the market opens at 8 p.m. So pretty much in exactly 8 hours from now, we'll be doing a live stream, and it's 11:33 for me. I'm on the East Coast, so get a sip of my water, and let's get straight into the portfolio update. As y'all know, I have so many different portfolios. This right here is my dividend only account. It's our main Robinhood account. Yeah, we were down 1.9% on Friday, but year to date we're up 13. Sorry. There we go. So yeah, we're still up 13% year to date. Here's what I'm not going to do. Just like the last tariff dip, when the market fell in April thanks to tariff, the market tanked, but it eventually recovered. I'm not going to, sell anything. I'm just going to hold it for the long run. And I actually have a portfolio specifically where once I buy a stock in there, I try and never sell it. But yeah, this is our dividend only portfolio. And every stock in here does pay a dividend. Most of these, as you can see, are like dividend growth companies, obviously Meta, Google, Constellation Energy, United Rentals. These all have well under 1% dividend yields, but I still own them because they pay a dividend, but they grow their dividends rapidly, way faster than inflation. So yeah, that's our main dividend portfolio. Look at our Roth IRA, where this is a bit more growthy of a portfolio. So if you look, we were down 4.77% on Friday and another 1% in the after hours. So yeah, every stock in here was down. RIPR portfolio. So here's our total percent change in every stock. Luckily, we still have some good gains on Inno data. How are we doing year to date? We're up only 8.5. We basically just started this a year ago. Yeah, if we look at the 1 year and the all time, it's pretty identical because there was no movement for the first couple of weeks. But anyway, yeah, that's our Roth IRA. Let me show you now my never sell portfolio. Well, it's not too accurate, but basically, which of your portfolios survived Friday the best? It was this account actually. It was my Moomoo portfolio, or maybe it was Robinhood because unfortunately I can't see Friday's performance. But yeah, on Friday McDonald's was green in here and Carlisle was green, so our two defense names in there. That's cool. Hey, what up, Dia? We'll get to crypto on Robinhood. Yeah. Um, as long as you buy and hold it, I know there's some fees if you like trade it a bunch, but it's good to hold crypto on Robinhood. SoFi, hey, we'll get to SoFi. Don't worry, because actually, in my next portfolio, I'm about to go over. I do own some SoFi. So yeah, this right here is my Moomoo portfolio, and we have just done stellar. So even though if we go, we fell a little bit on Friday. Year to date, we're still up 58% year to date. That's mainly from Comfort Systems right here. We bought this literally during the April dip. Deposited a bunch of money, and now we're up 5 Gs on it. Pretty cool. Powell Industries, we're up nearly 300% on them. They're my favorite switchgear solution, basically electrical infrastructure play. Coca-Cola Consolidated's been a good one. We've been DCAing, dollar cost averaging into this one lately. It's paid off well. If anyone's been here on my stream for a while, I've been talking about that one. Amphenol Group continues to climb. I'm looking to buy more Amphenol. That's your cable provider for Nvidia. Nvidia's NVLink spine uses 2 miles of copper cables, and they order most of them from Amphenol. They also just acquired CommScope, which is pretty cool. Amazon's a no-brainer. Perfect Mag 7, never sell stock, Amazon's, Mag 7. And then, my newest position is Ferrari stock. If you actually go watch my most recent TikTok short, YouTube short video, it's why I go over why I bought Ferrari. I didn't just buy them because they're on a dip. It certainly made it a great time, but I bought them because they're a high quality company, not just because they're on a dip. Same with Murphy USA. This is the other new stock I bought in here. So yeah, finally, then we'll go over this portfolio. Then we'll get to some of y'all stocks in the chat here. Yeah, I wanted to get to SoFi. We'll get to some of these stocks here. Someone said BURU. Yeah, BURU. I don't think we'll cover that one. That's like a $50 million micro cap. We don't really cover those kind of stocks, but maybe we'll look at it. But right here is our Weeble portfolio. And the top left is our all-time performance. We're up 17% all-time, which honestly isn't great. We've underperformed. But here are all our holdings in here. Our largest holdings are at the top. AMD. We got a lot of risky names in here. So yeah, AMD, UiPath. Actually, let me search by total percent change. We have some really insane winners like Robinhood, SoFi. We'll look at SoFi after this. That's a this stock isn't just propped up on momentum right now. This stock is at an all-time high because of their good fundamentals. They deserve to go up. I got Dave, Reddit, Disney, Super Micro, Clear Secure. Like some of these are fun money positions. Where as much as I love them, like Super Micro, as much as I love them, they just sell. Like I only want them as a couple $100 position, and then we have some big losers as well, like Zoom, Sprouts Farmers, Tap, Toast. Main, the egg stock. Actually, I might be total return green from all the dividends we've received. Even though we're down 7, I think I've received more than 7% in dividends from them. Doesn't AMD make processors? Yeah, AMD makes GPUs, CPUs. AMD just got a huge deal from OpenAI. Now, OpenAI, which basically owns Chat or does own ChatGPT, now uses chips. And also OpenAI, actually, here's the whole circular theory. OpenAI owns a 10% stake in AMD. Well, Nvidia has a $100 billion stake in OpenAI. So literally, Nvidia stock indirectly benefits from AMD going up because of their stake in OpenAI, which has a stake in AMD. So that's where this little circular bubbly feeling, we could rally through the rest of the decade. Like could be. But let's get to SoFi right here. I love SoFi, man. Again, they were down 8% on Friday, like most tech stocks. But I think in the long run, this is a great growth company. I'd put this on the watch list. I don't know if I'd nibble on them maybe here, but I wouldn't meaningfully buy them here yet. They're not cheap enough. They're still a bit expensive. But again, this is the kind of stock that deserves high PE. Here's why. This is a fintech. They have their own banking charter. They got it through a loophole that's patched because of them. Check this out. They're fine. Like this is why they deserve a high premium. Their financial services revenue is up 105% after it grew 80, after it grew 222, after it grew 260. It literally just hits a new record every year, every quarter. And this monster growth is what justifies the high premium. I mean, not even the analysts expected this sort of growth. Here are the actual analyst expectations. That's the orange line here. Analysts expected 804. They reported 850. Every quarter they beat on revenue. Every quarter they beat on EPS, which is net income. And every quarter they beat on EBITDA, like by a huge margin. That's why every quarter they gap up on earnings, because it was a huge beat from what the analysts thought. I really just think people are really taking SoFi serious. Sales are up 42%. They did 850 mil of revenue. Out of the 850 mil of revenue, 100 million of it was after tax net income. I mean, you can't make that up. So they're making net income every quarter. So that's what's cool about them. Okay, so let's see here. Okay, yeah, well, someone's been saying BURU. Here's why we don't really cover these kind of stocks on here. These are kind of the stocks I try to avoid. I try to tell people to avoid these kind of stocks. Like, again, none of this is financial advice, but if one thing you learn, I want to hopefully teach you how to avoid certain stocks. I like to bet. Like, I don't get me wrong. I love to buy companies that are on a dip, that are at a new 50, like Sprouts Farmers Market. I've been doing it to this one right here. If I'm going to buy a stock, I want to buy a stock on a dip that also has good numbers, good fundamentals. This is one I would not buy. This is ticker symbol BURU. If you look in the top right, they're only worth $62 million. Like, just think about this kind of logically. The whole entire company is worth $60 million. And check this out. This is the bad news. Well, first off, they have no sales. The revenue's down 97% to 9,000. So they have no revenue. They lose 12 million a quarter. Well, 12 million, 16 million, 10 million. Literally, the whole company is worth 60 million and you lose 12 million. That's 20% of the company. They lost 16 million, 20%. They literally lose more in net income than their market cap. And look at this awful balance sheet. Literally no assets. There is no assets. 2.4 million and the liabilities are huge. So in my opinion, this is one that I would just avoid. Like, there's these occasional little like rallies up from, like, it doesn't take a lot of money to move these kind of stocks, but just because there's so little market cap. But those are a flip of a coin. I wouldn't touch them. Maybe swing trade it. I'd have a plan to get out, but I wouldn't touch that with meaningful size. Hey, what up, Looney? What up, Wesley? Agreed. So yeah, I love SoFi. How should we buy gold stock? Upcoming huge crash. Gold is seen as like a safe haven asset. As stocks go down, gold usually acts defensive. War fears, inflation fears, currency, all that. Gold tends to does good. That's IU. What happens is, so yeah, hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, first link there. Could you do wait, oh, hey, what up, Ishwar? What up? Happy Sunday. Hope everyone's having a great Sunday. Hey, Dr. One Fly, no way. Thanks for all the roses there. Dude, you just sent like 50 roses. No way. Thanks so much, man. I really do appreciate that. So HDD said AVAX. I don't know if I've heard of this one before. Oh, that's a crypto. Oh. Yeah, apparently there was some like crypto flash crash. Look at that. The stock or crypto went from $28 And at one point, it dipped to 17, 28 to 17. Wow. We don't really look at crypto. By the way, I own no crypto. Um, Hey, I really appreciate that, Dr. One Fly. Would you say buying AMD right now is still worth it? Not meaningfully, no. So I do own AMD stock. We didn't even buy them on the dip, you know. I felt bad even when I bought it. So we watched it fall all the way to $76, but then we bought it after it went up to 125. And I'm like, oh, well, I know I'm not timing the bottom. But even if you bought it at 125 like me, you're still doing great. But here, nah. I mean, I love the OpenAI news. You know, OpenAI, ChatGPT now is using AMD chips. They're going to pump orders, and OpenAI now has a stake in AMD, and Nvidia has a stake in OpenAI. So I love AMD, but not at this valuation. Hopefully that was helpful. Actually, let's look at AMD's numbers. Here's what's so cool about them. Obviously, their future numbers, we'll actually look at their guidance very quickly, is probably going to get revised up. Yeah, here's their PC GPU market share. They have a 14% GPU market share. Obviously, you know, they're a huge data center play. You know, data centers need GPUs, and AMD makes their own GPUs. But yeah, look at this. Here's their orange line. That's the revenue estimates. You know, every quarter they're beating on revenue. And check that out. It's supposed to go to 9.2 billion. Maybe that will get revised higher. You know, at least they're making good net income every quarter. They have a pretty good balance sheet. Actually, no net debt on them. What about the FCF? FCF stands for free cash flow. It's a record free cash flow this quarter. So I do own them. Actually, I like AMD more than Nvidia because of the law of large numbers. If you look in the top right, they're worth 350 billion. So the whole company is worth 350 billion. Well, if you go to Nvidia, they're worth 4.45 trillion. For you to double your money on Nvidia, they have to go to exactly pretty much $9 trillion market cap. So I want exposure to semis. I feel like the easier double is at AMD. And so far, it's been done pretty good. And again, I didn't even time the bottom on this one too well. Okay, let me get off AMD. Okay, let's see here. Marathon. Hey, I would always recommend staying away from the Bitcoin mining companies. I've looked at all these before. I used to own Core Z. I've owned HUD 8 before. And it was a mistake. That was years ago, but I've never seen a Bitcoin mining company actually outperform Bitcoin. I've looked at Marathon, CleanSpark, HUD 8, you know, Core Z, Hive. None of them ever actually keep up with the performance of Bitcoin. Not a single one of them. So I would just recommend just buying Bitcoin. I don't expect any Bitcoin mining company to outperform actual Bitcoin, so I just recommend actual Bitcoin. What happens is, oh yeah, hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, first link there. It's an affiliate link, full disclosure. So if you go and deposit like $100, we'll both get like some free stocks. Anthony said Hood stock. Yeah, let's do Hood. You know, I also have a Robinhood portfolio, so I've probably given them. Dude, also I'm up 10x on my Robinhood shares. So honestly, Robinhood is one of my biggest regrets ever. Look at this. I have 5 shares left. Biggest L. I sold 50 shares at $36. Again, look where we were buying it. We were buying Robinhood. This is in 2022, 3. We were buying this stock at $8, $9, $10, and I was dumb. And it was tempting. Think about this. Here, I'll just kind of give you the context here. I literally have been buying Robinhood stock. You know, here's their IPO. I was buying this stuff. Here's the buy orders. You can see the buy orders there. And I was down. I literally held through all this madness. I was down for the longest time. And then when it finally got to $36, I was up 300%. You know, I'm like, let me just sell most of my position. Biggest mistake ever. So sometimes, thank goodness I kept 5 shares, but sometimes it's not worth it to sell your biggest winners because they'll continue to win. Same with SoFi. Man, SoFi is another huge L for me. Luckily, I still have shares, but I'd be upset if I didn't. Okay, but let me get back to Robinhood stock. This isn't just a stock propped up on momentum right now. This is a stock that totally deserves to be at this new 52-week high level. They're so innovative. Their new Robinhood contracts, they've done over 4 billion of those, and those are the high margin ones. Let's see if there's any news down here. Vanguard increases stake in Robinhood to 12. Okay, there's no real news. Okay. But here's the crazy part. We can see a cool metric here. Their net cumulative funded accounts. So this is the metric that's the most important. Their net cumulative funded accounts. It's 26.5 versus 24.2. So they've increased it a good chunk and they're beating on expectations every quarter. Check that out, you know, beat on revenue. But this is the real winner here. It's how growthy they are. You know, revenue's up 45, after it grew 40, after it grew 52. So they're on a growth streak right now, but they did 980 million in revenue. So remember this, they did 980 million in revenue and 390 million of that was after-tax net income. These brokerages have insane margins. Robinhood has this Robinhood Gold feature where you pay $5 a month. Here I actually have a Robinhood account. Here's the thing, I pay $5 a month. But I've given them probably a lot of referral fees. But anyway, they're so innovative. They now have, so they don't make much money. When you buy and sell stock, they don't make much margin off that. But whenever you go down here, where's that prediction thing I was talking about? Yeah, these markets right here. Whenever you go do stuff in here, they make a lot of money on every transaction. But yeah, you have to, so they're making a lot of money on their $5 a month. That's actually why I like this brokerage right here. With Robinhood, you have to pay $5 a month to get the APY. Well, this one's a free brokerage. If in the middle of my screen, I have $900 of cash. It earns you at 3.85% APY and you don't have to pay anything. This is my favorite brokerage right here. Again, if you want to get it, Alex said, was saying what app? Yeah, hey, if you want to get this app, I'm on. It's in the link tree in my bio. First link there. Again, this is a brokerage where you get stocks on. Let's see. Hey, what up, big man? It's 8 o'clock after hours. Yeah, I can't wait to see what happens. We'll actually look at crypto in a minute because usually crypto kind of tells us how tech stocks and the queues are going to open. Hey, Puck, what up, dude? Hey. Thanks. Hey, that orange is my favorite color. What up, Puck? Hope you're having a great day. Thanks for all the roses there. And hey, Papa Dan 33. What up, dude? Hey, if you guys got any stocks you want to look at, let me know. What do you think about Compound? Yo, Ram, what's the ticker symbol for Compound? What happened on on Sunday, on Friday, we had a lot of escalating tariffs, tensions between the US and China. Yo, that's hey, what up, user 33? Hey, what up, Nate? All right, let's look for some stocks here. I'm not seeing any in the chat. Let me look over here. Do you have a red flag checklist for stocks? Yeah, losing that, like Lucid's a good example. ChargePoint. I think we're halfway through the crash now. I think we'll probably maybe follow maybe a couple, 3 to 5% more. But I think we're probably close to halfway done with this crash that we're doing. Coke stock. Hey, what up, Anthony? So I do own, these are two majorly different companies. So I actually own Coca-Cola Consolidated. Check out the growth of this stock right here. This is the Coca-Cola bottler. Now we're going to compare this to actual just Coca-Cola stock. And this is, I want exposure to Coca-Cola, but I decided to buy the bottler. You could barely see the difference there. So I picked up ticker symbol COKE over KO because of their good financials. But, speaking of normal Coca-Cola stock, I do like covering that one as well. Let's see if this will work right here. No way, hold up. Yo, shout out to the homie Ron on the YouTube stream. Maddie, with the 25 Ron. No way, Maddie. He said coffee time. Thanks so much, dude. I hope you're having a great Sunday. Good morning. Hope everyone's having a great day. Hey, if you want to get this app I'm on, it's in the link tree in my bio, first link there. But this is a software. It's where you get stocks on. But I wanted to pull up the Buffett portfolio because he owns a lot of Coca-Cola. It's 9% of his portfolio. And Coca-Cola, you remember on Friday, it was a tough day Friday. The Qs were down like 3%. But look at Coca-Cola. They were up by 1%. So it's in these kind of markets where Coca-Cola has that defense that a lot of people like. And here's kind of what you get with Coca-Cola. Here's the main reason you get them. You get a nice 3% dividend yield, safe, very safe 3% dividend. And check this out. You get a 3% dividend and then you kind of just hope for like 3% stock price appreciation. I don't expect this, of course, to outperform the tech-heavy S&P 500, but you should hopefully just get 3% dividends, 3% stock price appreciation, maybe 0.5% share buybacks. So pretty cool. Coca-Cola's a nice defense one. Hey, what up, New York? Bitcoin company out competing Bitcoin could be CLSK. Yeah, that's a Bitcoin mining company. You're right. So check this out right here. If we go to the revenue in the middle, it says Bitcoin mining is 100% of the revenue. But yeah, they're nowhere near. They might be outperforming Bitcoin in the short term, but yeah, they're nowhere near their 2021 peak. And if we go to Bitcoin, they're like doubled since their 2021 peak. So actually, let me pull that up real quick. Bitcoin, yeah. So check that out. Unfortunately, but actually, let's pull up the daily here. It's probably outperformed it on the daily. The company with the ticker. Oh, hey, that's Realty Income. Is EOG a good dividend play? Absolutely. We'll actually pull up EOG after this. And hey, yo, Maddie, if you got a stock you want me to look at, let me know. Are you able to check OPFI? And they're doing buybacks. Yeah, we'll check that out. So yeah, look at them on the past couple weeks here. So on the past couple weeks, CleanSpark has majorly outperformed. But yeah. Anyway, I actually do want to pull up EOG resources. I used to own this one. This is probably my favorite oil and gas play. There's Chevron, Exxon, and then I like EOG because of their dividend rule, the way they manage their money through dividends. Of course, if we go to the revenue right now, it's down 11%. That's just because every oil stock is saying the same thing. So revenue's down 11, but this is the best part. They're still printing money, easily 1.4 billion in net income a quarter. And let's go see how much the dividend costs. They're making 1.4 billion of net income a quarter, and the dividend only costs 520 million of net income a quarter. And since they have so much leftover money, they're literally spending way more on share buybacks every quarter. That's what's so cool about these dividends, these oil and gas stocks. So again, these don't outperform the tech-heavy S&P, but you buy them for the defense. If there's war fears and inflation fears, oil does good. And in the meantime, you get a 3.5% dividend yield. So you get a 3.5% dividend, safe payout ratio, the share buyback. So look, if we go to the net income is down by 20%. But the net income per share is only down by 16% because they've bought back 4% of all the shares. So that's a cool oil and gas play. Probably my second favorite. My first favorite is when I just bought Murphy USA. And again, if we go to any oil stock right now, we go to the revenue, they're all seeing this similar sort of downtrend. Revenue's down 8% year over year, but this one has a way lower dividend. Check that out, only a 0.5% dividend. That's actually what's unique about this one, why I bought them. I think they're going to be more growthy than any other oil and gas stock out there because of their dividend payout ratio. A lot of these oil and gas stocks suffocate them with high payout ratios, but 7% payout ratio on MUSA. Pretty cool. Hey, what up? Papa Dan 33. If you got a stock you want to look at, let me know. I got you. And hey, what up, Nate? Hey, heck yeah. He said Baba. Let's do Baba. Then we got to get to FUTU. Yo, Looney. What up? We'll get to FUTU. I want to get to OPFI again. Let me actually remind myself. I want to get to FUTU. Sorry, we'll kind of, I try to go quick with every stock here. So yeah, let's keep going here. What's the app? Oh yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, the first link there. Okay, so here's Alibaba. This is like your Chinese B2B play. The e-commerce B2B play, not business to consumer like an Amazon. I do like Amazon, but it's like a lot of businesses buy stuff from AliExpress in bulk and then sell them themselves. If we go to their net income, this is the good news. This is a Chinese company, so they're an ADR, but we've converted the currency from Chinese to USD, and this is good USD. They're easily making 4 or 5 billion of after-tax net income a quarter. So they just recently started paying a dividend in 2024, so you now get a 0.6% dividend yield. These Chinese companies usually trade at low multiples, 18 PE. The reason they tanked on Friday, obviously, is because of the escalating tensions between China and the U.S. tariff stuff. Basically, there's news down here. Alibaba establishes robotics division and partners with Nvidia for physical AI. Is that real? Alibaba partners with Nvidia for that's actually really cool. Alibaba Cloud positioned for major growth with strategic partnerships. Forecast 30% cloud revenue growth. Pretty cool. There's a lot of businesses I don't know about Alibaba. Another Chinese stock that I really love that I want to get to next is FUTU. What up? Let's do it, Looney. And then I want to get to OPFI eventually. Baba, high volatile growth stock, extreme high risk. I agree, def high risk. Here's another. This is one of my favorite growth stocks out there. They're, in my opinion, a better version. They also fell a bunch on Friday, but they're a better version of Robinhood. They're Robinhood stock. They're like Weeble stock, but with the higher yield. It's this brokerage I'm on right now. You can see their PE ratio. It's cheap. It's a 21 PE, and they're super high growth. I mean, this is cheap in my opinion. Hey, again, Fudge. If you want to get this brokerage I'm on, this app I'm on right now, it's in the link tree in my bio, the first link there. But check out the revenue growth. This is ridiculous. The revenue is up 69%. So the revenue is up 69, but the net income is up 111. What does that mean in English? Basically, they rose their margins, or their margins rose. Check this out. Their net margin went from 38 to 48. That was unbelievable. That was some insane. That blew me away. And that was real, not some one-time adjustment either. They just recently got into crypto. Again, this stock we're looking at, this numbers is the brokerage I'm on right now. And they just got into crypto. This other income, which is part of this now, just added their crypto. It's blown up. I mean, 174%, 158. So that's growing like crazy. Their brokerage commissions are up 86% year over year. And also their interest income, that's up 43% after growing. The growth is insane. This interest income, again, the stock we're looking at is this brokerage I'm on right now. If you look in the middle of my screen, I have $975 of cash. It earns me a 3.85% APY. Then they earn a little APY on top of it. That's how they make that money. Hey, what up, Eli Chamat? Hey, thanks so much for the rose and Wilfie. Hey, thanks so much. Um, Yeah, hey, by the way, yeah, if you want to get this software I'm on, it's in the link tree in my bio. First link there. It's a brokerage where you buy stocks on. It's an affiliate link, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. What is PE? Hey, PE ratio is basically the net income multiple plus any share buybacks. Sandridge Energy. Hey, Nicholas, what's the ticker symbol for that one? AC said SOL. Oh, that's, are you talking about Emeron Group or Solana? Um, Is SCHD enough or still need to buy individual dividend stocks? SCHD, if you're 10 years away from retirement, don't buy SCHD. It won't outperform the S&P 500, but it's a nice dividend ETF if you're looking for a yield. You get a 3.9% yield. I love its top holding. AbbVie's its top holding. I would just buy AbbVie itself. I'm actually there. I'm heavily watching AbbVie. They should do good even when tech kind of falls. If I'll buy them. Hey, yeah, Baba to the moon. Yeah, dude, Alibaba's great. Yeah, hey, Faraz. This app I'm on, it's in the link. If you're on the YouTube stream, it's in the link in the description. The link tree is in the description, or this platform is in the description. But if you're on TikTok, it's in the link tree in my bio. Ooh, Taiwan Semi. Let's do that one. Taiwan Semi. This is a great semiconductor name and a perfect stock I would never sell. Or if I held shares right now, would I take profit on them? Absolutely not. I think they're going higher, not financial advice, of course, but it's like you get exposure to Nvidia with the higher dividend yield. Because if you didn't know, Nvidia just designs the chips. Taiwan Semiconductor actually manufactures Nvidia's chips for them. If we go to the PE right here, they're still trading at a fair multiple, 30 times PE. The market industry is a 46. So they're trading at like an industry low multiple. You get a nice yield. Look at this. You get a 1% dividend yield. So that's great. Look at that. They raise their dividend every year faster than inflation. So that's great news. But their market share for their nanometer wafer chips are expanding. It's at 71% versus 62. Their market share nearly grew by 10%. But here's the best news. I mean, they're a growth beast. I mean, that's why I trust this one. Like the growth is insane. The revenue's up 55%. Revenue's up 55, but net income is up by 79. So that means they grew their margin to a 42% net margin. You can spend $100 on this company, $42 of it is after-tax net income with them. And if you go to the net income, they're easily making over 10 billion of net income a quarter. It's insane. So that's why I think Taiwan Semi is a great hold. Hey, X-Tick, thanks so much. How are you? Hope you're having a great Sunday. Yeah, Taiwan's a good one. What are we talking about? Hey, what up, Benny? Yeah, we're just looking at stocks right now. I sold my last stock, Riggedy, on Thursday. I'm waiting. Hey, Magic Stock. That I would agree that Riggedy's a good one to sell. Should I sell SCHD? If you still have 10 years and are looking to compound your money over 10 years, SCHD will probably, I judge every stock based off for what I think it'll total return CAGR a year, you know. So that's why individually investing can be better than the S&P 500 because you can get like 10 to 20% returns a year, sometimes even more. Like Comfort Systems, I bought this one less than a year ago, and basically we got 12 years of returns. I try to get 10% a year, and Murphy Oil, yeah, hey, I would get Murphy USA. This is the way better pick. Murphy Oil, nothing blows me away there. I've looked at their numbers. I would get. Should I sell my Walmart shares? No, Walmart's a great never sell stock. Great defense name. It's kind of like McDonald's. In 2008, McDonald's and Walmart were the two best performing stocks in the S&P. You get a nice yield too. Check that out. 0.9, nearly 1% dividend yield on Walmart. I love their Costco competitor. It's Sam's Club. It's a great business model. You have to have a subscription to get into the store. Whether you go to the store or not, they're still collecting that high margin subscription revenue. And when you buy stuff there, you're buying stuff in bulk, so you get a good deal. They have the loss leaders like the Costco $1.50 hot dog, all that. But yeah, look at this net income. They're easily making $5 billion in net income a quarter. Then they just spend 33% of that on dividends, and then they do some share buybacks. So Walmart's a great defense name. That great addition to a portfolio. I wouldn't have it as a huge position, but it's a nice diversification, like nice little 5%. Yo, El Chamo, what up, dude? He said, check out the dividend on ORC. Is that Orchard Capital? Oh no. Hey, I feel bad if you own this company right here. Please. We'll get to OPFI. I believe this one is a dividend trap. And so check this out right here. As you know, when a stock goes lower, it makes the yield go higher. If you go to the dividend, Notice the dividend every year goes down. So you're getting paid less and less every year, and the yield, it says 20%. It's not a sustainable dividend yield. This is a mortgage REIT, and we just saw the stock was at like an all-time low, unfortunately. Uh, well, let's go to their numbers right here because I actually do want to check this. There we go. Sorry, my phone just disconnected there. That was weird. But it looks like I don't even know how this is possible, but the revenue is just, these year-over-year declines are bad. The revenue went negative, but yeah, just not one I wouldn't trust my money. Yeah, you get the 20% dividend yield, but you lose like 20% plus in stock price appreciation. They reverse split. It's tough. Yeah, hey, yeah, they're mortgage REIT. I'd rather buy like an MAA. This is a Sunbelt apartment REIT. Um, they actually have a sustainable 4.5% yield, you know. Okay, OPFI, let's do it. OPFI. And he said, can we check if they're doing share buybacks? Let's do it. So this is worth $870 million potentially. Let's see. So the revenue expectations are really nice. You know, revenue is supposed to go from 135 to 155. Net income is positive every quarter. They are, wait. Oh, and actually, this was a little one-time adjustment. The net income did actually grow year over year, but something, some sort of adjustment here. But let's see if they're doing share buybacks. Here's how we check. You go to the cash flow statement, and then you scroll down here to the net common stock issuance, and no, they have not done any share buybacks. Cash dividends paid. Wait, cash dividends paid, 43 million. They must have preferred shares. Oh no, they do pay a dividend now. Yeah, it went from 12 cents. Whoa. So you get a dividend with this company. Huh. Well, I don't know. They're worth 800 million. That's weird that they pay a dividend. Or no, that was a special dividend. So those are their special dividend payments. All right. Yeah, that was a 25-cent special dividend. Interesting. Have a great day and week. Hey, givers, takers. Thanks so much, man. Hope you have a great Sunday. I appreciate that. I want to sell my SHD now, but I need to wait for it to rise first. Yo, hey, I'd be patient on that one, IDK. Yeah, just wait. You know, might be worth it. Might outperform in this market. So they will fall less than maybe the tech-heavy S&P. Yeah, Joseph said Meta stock. Yeah, hey, Ferrars, I'm not sure if I can help you out there. By the way, I don't sell anything. I have no course, book, WhatsApp. Yeah, hey, what platform are you using? Oh, yeah, by the way, this is a brokerage right here. If you want to get this app I'm on, it's actually where you buy stock. So if you want to get it, it's in the link tree in my bio, the first link there. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. But here's Meta right here. This is a great never sell company. Let's see if there's any news down here. I love this like AI news. Meta Ray-Bans expands smart glasses partnership with major production target. Oh yeah, Meta took a 3% stake in their company. Okay. Anyway, here's what I love about Meta. You know, they own so many popular apps like Instagram, Facebook, WhatsApp, and Threads. You know, Threads now has the same amount of daily active users as X, which is crazy. We're right here. If we go to their daily active users, it's 3.48 billion. I mean, that's insane. Basically, half the world is on one of their apps a day, and they're printing money. I mean, easily 15 to 20 billion of net income a quarter. They now pay a small dividend too, low payout ratio. They're investing in AI. They bought Scale AI. We go to their cash investing activities. I love this. They spent 25 billion this quarter. I love the new Oakley Ray-Bans. Those are so cool. I want to buy a pair, but I don't think I could spend $300 on some glasses. But they are very cool. The Oakley ones. Yeah, that's why I own this company. Well, hey, full disclosure, I do own Meta stock. I own 5 shares of them. Yeah. Okay. Nicholas said, can you look at SD? Sandridge Energy. So let's check it out. This looks like an oil and gas stock. They haven't done too good. They're at basically their IPO price in 2016. So if you bought them in 2016, you're down on your position. Let's see. So acquisition, development, and production of oil, natural gas, and LNG. So yikes, you can just kind of see the annual trend of their revenue has just been down. But recently it's been good. Yeah, so like in 2022, it peaked and it fell 41, then it fell 15. But it looks like the growth is kind of coming back recently. So we want to see this growth continue. And they didn't just do 34 mil of revenue. Actually, Is that real? Oh, well, they must be making an interest on their cash. We'll actually go check that in a minute here because the the net income is way higher than the operating profit, and that shouldn't be unless you're making a lot of interest on your cash. And if we go to the uh, they're making $1 million a quarter on interest. So anyway, they are profitable. That is point being, they're still making insanely well margins, 30-40% margins. So you get a dividend and you get a 3.88% dividend. Actually, they're not as bad as I thought. The fact that the growth is back is great news. They have really good margins. Carl Icahn's the largest shareholder. That's not, whoa. Carl Icahn. This might be, oh wait, this might be an MLP, so do beware. You might get a K1 tax form. But anyway, I love their margins. Which brokerage is this? Yeah, hey, if you want to get this brokerage I'm on, Alan, it's in the link in the description, or it's in the link tree in my bio. The first link there. Okay. White fiber. Hey, what's the ticker symbol for that? Should I buy Nvidia or wait for Monday? Well, yeah, I guess you could buy it in the overnight market. I would, if your plan is to just never sell Nvidia, then it's probably worth it to just buy now. But yeah, this one, if you want exposure to semis, I don't love Nvidia because if you do look in the top right, you see the market cap. They're worth 4.45 trillion. For you to double your money, they have to go to 8 trillion. But they definitely deserve to be at an all-time high, and they definitely deserve this market cap. Like we can see their PC GPU market share, 24% GPU market share, up from 20. They have automotive software that anyone can license from them. It's like a Tesla competitor. Hey, well, look at the meme ETF. Heck yeah. Hey, Nar, thanks for all the roses there. I appreciate that, my friend. But yeah, Nvidia is a huge data center play, but they just print money. Nvidia's customers are the most cash-rich companies. It's the other Mag 7, Microsoft, Amazon, Oracle, OpenAI, Meta. So all these other companies are printing money to Nvidia, and they have so much pricing power. So look, if we look at their revenue, they did 46 billion in revenue. Out of that, 26 billion was after-tax net income. They literally have 56% net margins. Incredible. So I should pin a comment here. Yeah, hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's actually a brokerage. It's where you get stocks on, and it's an affiliate link, full disclosure. So if you deposit $100, we'll both get like some free stocks. So I'd appreciate that. But actually, speaking of Nvidia, one really cool thing is Nvidia is so big that they own some individual companies. Here's the actual Nvidia portfolio. They own CoreWeave, APLD. As CoreWeave does good, Nvidia's the largest shareholder. So as that gains market cap, 20% of that market cap goes to Nvidia, and they have stakes in Nebius. Nvidia's stake in Nebius is up crazy after that Microsoft partnership. They own ARM. I love ARM. That's really a royalty play. All right. Hey, Hector, we unfortunately can't cover DKNG. Yeah, hey, SHD isn't a bad ETF. For sure. I totally agree. Like, if someone said, I'm just going to, investing in SEHD is better than doing nothing with your cash. But if you're like going to retire in 10 years from now, I would go with something that'll have a better total return performance and then switch to SEHD after. Robinhood still buy? Not yet. For sure, not yet. Chris said WYFI. Let's do it. So this is White Fiber. Looks like they just IPO'd in August. So they really haven't been public that long. Let's see what they do though. We can't see it, okay, because they just IPO'd. Software, infrastructure and cloud data center company. Let's see what the revenue is. Revenue is, okay, 18 million. So this is a very small company. At least they have a good balance sheet, quite a good balance sheet. But revenue is up 48% year over year. They are still losing money. But look at the expectations. So watch out for this. Revenue is supposed to go from 18 million to 28 million. So anyway, it looks like there's a lot of future growth here. What's the market cap? 1.25 billion. That's actually might be fair. That might actually be fair, 1.25 billion. I'll actually put them on the watch list. I don't love buying companies. There's still the lockups where the insiders are still waiting until they're able to sell. But that is interesting. Miko, what up? Said APLD. Speaking of the Nvidia portfolio, let's actually check this out. Nvidia's largest holding is CoreWeave. Then their next largest holding is APLD. Hey, Adrian, happy Sunday, man. Hope you're having a great day. By the way, if you want to hit the follow button, we stream every Sunday at this exact same time. So D-Wave Quantum. Hey, should we look at D-Wave Quantum? So here's APLD. This we'll pull up. That's a huge momentum play. But yeah, APLD, they reported earnings on Friday. So that's why they were up 16%. You know, most things were down on Friday, but they were up 16%. Yeah, hey, Aries, if you want to get this app I'm on, it's in the link tree in my bio. First link there. It's a software over stocks. But this just reported earnings on Friday, and check out what the earnings were. You know, the orange line is what the analysts expect. You know, the analysts expected 45 mil. Well, they reported 64 mil. I mean, just a huge beat. That's why they rallied up so much. So yeah, it's a data center hosting business. They actually been getting a lot of partnerships with CoreWeave. Let's see if we can find this. No, well, the news is gone. Anyway, APLD and CoreWeave, two companies both owned by Nvidia, went to a huge partnership. Anyway, they just had great earnings. That explains why they rallied up so much. Baba, is it bad right now? Actually, Alibaba is actually a decent stock to nibble on right now. They are Chinese, though. Hey, what up, Bobby? What up, dude? Hope you're having a great day. So Qubits, again, D-Wave Quantum. This stock you're really buying for their momentum because this trades nowhere near reality. Like, I know what an $11 billion... Oh, we got to look at meme. Hey, yeah. Bro, I keep forgetting. I'm so sorry. We'll look at it after this. But if you look in the top right, this is an $11 billion market cap. This whole company is worth $11 billion. If you go to the revenue down here, you know, it's just... It doesn't match what an $11 billion company should. I mean, this makes Powell Industries look dog cheap. You're buying that for the momentum. So what is meme? You see the meme ETF? I didn't even know that was a thing. So it looks like this just IPO'd. Yikes! It was down 5%. So let's see what it owns. Fund. Oh no! I won't even let us view what's in the fund because it just IPO'd. So sadly, we can't even view what's in here. Dividends. We can't see anything. Anyway, there's a 0.69% expense ratio. So unfortunately, I wish I could... Actually, maybe it's on Weeble. Let's pull it up over here. Meme ETF. Will it view what's in here? Nope. So it doesn't matter. So it's just we just don't have the data for it. Sorry. Hey, if you got another stock you want me to look at, let me know. Hey, what up, Fear? I just went to the Qubits headquarters and dropped off my resume. Hey, Adrian, they should see your Moomoo Club. You know, they're gonna hire you. If VOO drops 25% on Monday, what would you buy? Bro, I'd be on a frenzying spree. I buy more of what I already own. Because I want to build them into bigger positions. Like, I'd love to like double my size in Amphenol. Amazon, buy some more Ferrari, and some like Meta, Google. CRDO. So yeah. CRDO is a great one. Actually, we might pull up that one. Someone said, what about Target? So, oh, wait, Heather said honest company. So here's the thing. This one's a really talked about kind of meme stock, or it's not really a meme stock. You know, nothing just really blows me away here to really think this will outperform in the long run. Like, you know, again, they're a $413 million company. They just sell, 70% of their sales are diapers and wipes. You know, they just sell a commodity. They sell like healthy versions of it, but they're just not as growthy as I'd like. If we go to the revenue is only up 0.44% year over year. So that doesn't really beat inflation, 0.44% revenue growth. But good news, what I do like is the fact that they did kind of just, for the first time, they're really making net income, you know, 3 million. So that's good. We want to see that up, but I really want to see the growth come back. And that probably explains why the stock has kind of been flat for a while and it's kind of trend down since the earnings report. So Target right here, this one is kind of a dividend play. LAC, what up, Ray? Hey, LAC just got a huge stake from the government. Government basically just can't let them go bankrupt now. But here's Target. This is kind of a dividend play. If we go to their dividend, you get a 5.24% dividend. So that's kind of the main value here. But they've been struggling. You know, they're not like your typical grocery store. If you look at Walmart stock or Costco, they're doing really good right now, but this one's doing terrible because they're less of a grocery store than those. Or this is my hunch. You know, food and beverage is only 22% of the revenue. Then it's household essentials, apparel and accessories, home furniture, decorations, you know, beauty products. So it's more discretionary items. And the growth is also gone. You know, the revenue's down 1% year over year. on the revenue. The net income's down 21, which means the margins are falling. But, it's already a super competitive low margin industry, 3 to 4% net margins, and they're not real. They're kind of being out innovated. Anything you can get on Target, you can get at Walmart and Amazon, and Walmart and Amazon actually deliver the stuff to your house for you. I don't think Target does delivery. So that's why I just stay away from Target. I'd much rather buy an Amazon stock, much rather. And I'm actually been thinking about doing that. And I also own Amazon, so I'm gonna be biased. Yeah, hey, Video 7 said, how about Amazon? Let's talk about Amazon for a quick minute here. Great never sell stock, in my opinion. The most valuable part of Amazon, not many people know this, is actually their AWS, Amazon Web Services. It's their highest margin business. It's over 100 billion of annual revenue for them. But Amazon, there's so many businesses in one. Actually, I wonder if it'll pull this up for you. Yeah, like their online stores are 41, then their third-party seller services, their Amazon Web, they're an advertising company, a subscription company with their Prime business, physical stores, grocery stores. Like, they're the best robotics play, e-commerce play, book play. Well, not best, but I mean advertising play. They're literally a Walmart, a UPS, an Oracle Cloud, an Instacart, all in one. They're getting into satellites now. I mean, this is a company you don't want as competition. And if we go to the best part is you go to their cash from investing activities, they used to plow money in the future into new assets to be so innovative. So Amazon's one I'm betting on in the future. I'm going to buy more Amazon and never selling. I agree, Looney. This one's in my never sell portfolio. Like, they're worth even buying, like, right now. If your intention, like me, is to just never sell Amazon, it's worth it to never sell. I mean, or like at least put a little bit of money in them. I mean, like, if we go to their net income, like, it's not like this is some startup. I mean, we all know Amazon, but if we go to their after-tax net income, Amazon literally makes 15 to 20 billion of after-tax net income a quarter. I mean, it's ridiculous. They're expanding margins. Like, this used to be a tough buy, a couple years ago, negative margins, low single digit margins, but now it's double digit margins growing. So I love Amazon. I lost quite a bit on Wolf Speed recently, was not expecting reverse split stocks. Yeah, hey, Wolf is one that if you just looked at their numbers, it's one that you would see that you just never want to touch them in the first place. Hey, we've all lost money on those kind of stocks. I lost a lot of money on ChargePoint. Yeah, hey, DK, the thing, I can't cover what this company does, but they're kind of, oh, wow, they've really been struggling. They're kind of being out-innovated. Everything you can do on here, you can do on Robinhood pretty much now. Well, not everything, but yeah, they're struggling with just making consistent net income. Like, they made 150 mil in net income, but then they lost 30, 140. So if you average it out, they're still net losing money, but they are getting closer. They are getting closer and closer to profitability. I love the growth. The sales are up 36 after it grew 26, after it grew 87. Like, the growth is insane. But we do want to see them start getting more profitable. And I know certain states are like hiking taxes. It's just, I don't love this industry, but I do like Robinhood but not at this valuation. Is Maine a good stock to own for the long term? Not for the long term. And actually, sadly, I've been debating actually maybe selling Main Street Capital, but not for a while. But I'm not selling IRM. IRM is I'm thinking about moving all the money from Main Street Capital to Iron Mountain. But Main Street Capital is the best, I think, BDC out there. They're a business development company, and this is the best performing one I found out there. And they're making so much money right now. If we look at the past month, though, they're down 17%, but I'm actually probably looking to buy a little more Main Street Capital and then eventually probably sell it. Like, I don't mean probably in like a couple months I'll sell Main Street Capital, but yeah, I eventually want to, for a long term, like 10, 20 years like that I have, I might be doing my future self a disservice. Retiring with my 20 shares of Hood. Yo, all it takes is 20 shares of Hood with how good they've been doing. But yeah, Main Street Capital is one of the monthly paying dividend stocks. SEHG and VOO are amazing ETFs. Why? Yeah. So these are great ETFs because they're market cap weighted. They let their winners win. So what I mean market cap weighted is, the reason Nvidia is 7.76% is because of the most valuable company worth 4.45 trillion. They only the reason these make up so much of the index is because of their market cap. Then it's Microsoft, then Apple, Amazon, Meta. So I love how the S&P 500 works. I love their strat, like how they kick out certain companies. ETFs are so tax efficient. Whenever they sell a company in the ETF for a huge gain, it's tax-free for them and you. If you were to do it yourself, if you do the exact same thing an ETF does and just copies it, you would pay a bunch of taxes. But the ETFs, they it's kind of like a real estate transfer. They convert it to another stock, or they convert it to an S&P 500 index cash, tax free, and then convert it to another stock. Well, Amazon never gets to 1,000 plus. Like, hopefully, I hope so, but that'll probably be in a decade. But yeah, I do expect Amazon to probably like return like 10% plus a year, even right now, this price. Let's keep going. Ooh, Visa. Yo, Rahula said Visa. Let's do it. So you know who actually owns Visa? I think Buffett also owns Visa, but Nancy Pelosi got some Visa, the genius trader. But you know, I wouldn't just buy the stock because Nancy owns it. I'd buy the stock because they're a good quality one. You know, they have a shared oligopoly with MasterCard. You know, all those small micro credit card transaction fees that are slowly bankrupting us are making them a lot of money. They make that basically high margin fee. And check this out. What happens is, hey, by the way, this is a software where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there if you want to get this happen on. But look at this net income. This is crazy. They're easily making $5 billion in net income a quarter. And what is Visa doing with this? What is Visa doing with $5 billion of after-tax net income a quarter? Well, they're just returning it all to you via share buybacks. They literally spend $4 billion of their after-tax net income a quarter on share buybacks and a little bit on dividends. You get a 0.67% dividend yield. And here's what the share buybacks do for you as an investor. We go to the net income growth. The net income's up 8%, but the net income per share is up by 12 because the share part of the ratio went down. Well, hey, by the way, this is a brokerage. It's where you get stocks on. If you want to get this software I'm on, it's in the link tree in my bio, the first link there. It's an affiliate link, full disclosure. So if you go and deposit like $100, we'll both get some free stocks. But yeah, let's see. SPMO. What's this one? SPMO. But yeah, Visa's a great never sell position. Oh, SPMO. This is the Invesco S&P 500 Momentum ETF. It's actually done better than the S&P 500 and in the QQQ. And an ETF, again, is just a basket of stocks. And what does it own? Well, this is everything it owns. This is actually unique. Its largest holding is actually Broadcom. And then it's Nvidia, then Meta. So notice, this is actually what's so cool. Notice Apple and Microsoft aren't on here. It goes at Meta. I love this. Meta, then JP Morgan. JP Morgan's been a sleepy, like insane performer. I mean, look at Meta. I mean, JP Morgan. JP Morgan's done this good on top of giving you a 2% dividend. Then they got Netflix, Palantir, Oracle. Those have done insane. I like the SPMO. That's a momentum. Do a Rust live. Hey, I miss Rust. I used to have a Rust YouTube channel. Well, I still have it. I just don't upload on it. Let's see. MP materials. Yeah. So basically right now what's happening is we're trying to be more resource independent. You know, China is threatening rare earth exports. Like basically if they allow us to buy their rare earth minerals, that gives us power but basically the government right now, because China's, tariff and want to do that, MP Materials, the government took a huge stake in this company. So the government owns like 10% of the stock. Basically, the government's opening up this one rare earth mineral mine at MP Materials that's going to supply certain rare earth minerals for the U.S. for the next like 50 years. And basically, the government can't allow them to go bankrupt. I wouldn't probably buy them here, but I'd put them on the watch list. Kind of like Intel and LAC. Lithium America is another one. We've seen the trend recently of government taking a stake, so that way we can actually be more independent, especially because they're threatening everyone with tariffs right now, and we don't have the resources to be independent with. So that's interesting. Can you do IRM since you mentioned it? Let's do Iron Mountain. This is one of I looked at all the REITs out there and I'm like, I want a REIT, but I said to myself, I want a REIT and I want a BDC. Let me find the two best ones. And I found Main Street Capital's the best BDC, and the best REIT, which is a real estate investment trust, is actually Iron Mountain, in my opinion. I think this one will have really good growth, like more growth than like a realty income. This is a data center REIT, and they also do paper shredding. Like some of their top customers are literally like the IRS, hospitals, governments. So these global records and information businesses, basically they send armored trucks to your business and shred paper for you. And they actually make good margins on it, I kid you not. But the most recent growthy business has actually been the data center business. So the corporate and other is up 51. But they projected this business, like it's 189 million revenue now. They're expecting an additional, like it's 180 million of quarterly revenue. They're expecting an additional 600 million of annual revenue coming by like 2028, like or something like that. I love this company also for their dividend payout ratio rule. If we go to their dividend, you get a 3% dividend. They have a rule where they won't let their dividend payout ratio get out of the mid 60s. So their dividend payout ratio won't go over 60%, which is great. So anyway, that's why I bought Iron Mountain for the growth. Let's see, Iron Mountain. Hey, thanks, JC. He said Iron Mountain has a robust IP escrow business. Hey, thanks. I like when people tell me stuff that I don't know. Hey, what up? Old Wheezy said Path stock. It's one of my biggest losers, actually. Actually, here, I'd like being fully transparent. I'll show you this, actually. If we head over here to my Weeble portfolio, yeah, we've definitely underperformed all time. If we go to the top left, open P&L, we're only up 17% all time in here. But actually, right now, our biggest loser has been UiPath, and it says we're down 21%. We were just down like 40% on this company. We've been in this one for a long time. This is the company. This was the original like robotics play, but they really just got out innovated. They have real no moat, I don't think. That's why I'm still studying. Like I'm kind of trying to get out of this stock, but they just had some huge partnerships with OpenAI, Microsoft, and Snowflake and Google. But right here, the stock gap down because the CEO quit out of nowhere. It was a terrible look. Cash grab, left the management for dead, and it was just not a good look. I own 122 shares. Look at where I bought these shares. It's kind of on the very bottom right. 2021, like I've been a bag holder. I've been diamond-handed UiPath, so I've been trying to get out of them. Yeah, we're down bad on Zoom, and I even have some stocks that I've sold that you can't even see on here. Like I've sold a bunch of ChargePoint for a big loss. But I do own shares, and I hope they do good. But I'm still investigating their moat. Motley Fool. Hey, any penny stocks? Hey, what up, Saw? Penny stocks. I don't. Penny stocks are worth having as very, 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 very small positions, and I don't normally recommend these kind of ones. But one I'm watching, they're worth only like $700 million. CRMD, Cormedics, and again, small market cap companies should have small allocations. You never want to have these as meaningful size positions. So I got Cormedics. I might go over them actually a little later. No way, yo. Oh my goodness, yo, shout out to the homie Tommy1 with the $9.99 super chat. Dude, thank you very much, my friend. I hope you're having a great Sunday. Yeah, no problem, man. And hey, shout out to Bubble Wraps who said subscribe. Hey, thanks for subscribing. Hey, by the way, if you want to hit the follow button, we stream every Sunday this exact same time. I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Please watch out for people impersonating me. I appreciate everyone here. Dylan said Square Inc. Hey, what's the ticker symbol for Square Inc? And I'll try and get to that one. Rocky said there's an EV company called NEO. I don't love this one just because of the net. This is just such a capital intensive business, and they're Chinese. Do you have a Discord? I technically do have a Discord, and I never like to talk about it, but I have a Discord. I made a Discord before it was free, and it got a bunch of scammers. So basically, I have a Discord, and if you want to join it, it costs $1 to join. I made it the literal amount minimum. So if you want to join my Discord, it costs $1 to join, but there's only you're not getting $1 worth of value in it. But anyway, if you look at the top, it's in the link tree in my bio. But anyway, there's like 10 people in there. But anyway, if you look at the top right, this is a $16 billion. Basically, I have that private Discord just for people to ask me a question. If you have a personal question or you ever want to ask me, you're dying for me to personally analyze a stock for you, you basically do that for $1 in my private Discord, and I'll do it for you. But anyway, I never talk about that. If you ever been on my stream before, I've had that Discord for like a year, and I've never mentioned it on the stream before just because but it costs $1. I made it bare minimum. But anyway, here's NEO right here. This is that EV company. They are an ADR. They're a Chinese company, so you do pay the ADR yearly fee. But here's what I just don't love, like the fact that they burn through this net income. We've converted the currency from Chinese yuan to USD, and they literally lose like 700 million to 900 million of net income every quarter. They're a bit leveraged too. Last quarter they had the same amount of liabilities as assets, but this quarter the assets were higher than the liabilities. That's not possible because they lost 700 million. So they actually diluted the shareholder while the stock was at all-time lows. You go to the cash and financing activities, they diluted you by 1.6 billion, 2.8 billion. Oh, look, Abu Dhabi is the largest shareholder. Anyway, I don't love NEO just because I just don't love money losing companies. If you like car companies, I actually just bought for the first time ever on last Friday was ticker symbol RACE. Ferrari stock, they have major pricing power. They actually make net income every quarter, which is good. 500 million net income a quarter. They actually have really good margins, double the margins of Tesla. But again, and they pay a dividend. Um, uh, what is this right here? Hey, thanks again, Tommy One. AC, what is this one? Oh, wait, Aaron Lee said AXP. Oh, that's American Express. You know who actually owns AXP, American Express, is the homie Warren Buffett. If we go to Warren Buffett's portfolio right here, his second largest holding, 16% of his portfolio is an American Express. It's a great dividend growth company. Like, not only do you get a good yield, but you get good stock price appreciation. Like, this has outperformed the S&P 500 for sure, while getting a dividend. So look, it's a 1% dividend yield, but look how it grows. In 2020 you got paid $1.70. Now you get paid $2.80. Like, the dividend you get increases with more than inflation every year. 1% yield, 22 PE. That means they trade at 22 times net income. That seems pretty fair. Look at this after-tax net income. That's insane. Revenue's up by 9. They're making we'll just call it, we'll round out. They're making $2.5 billion in net income every quarter. Let's go see how much the dividend costs. They're making $2.5 billion in net income a quarter. The dividend only cost that's their share buybacks. Whoa. The dividend only costs $593 million. They have so much room to raise a dividend. Since the dividend literally costs nothing, that's how they're able to spend $1 billion plus on share buybacks a quarter. So if we go to the net income fell by 4.3. But the net income per share is only down by 1.69. So you get a 1% dividend, 3% in share buybacks, or 2% share buybacks, and this insane stock price appreciation. Like, AXP is a great one. Buffett's is happy with his position, I bet. Big Man's, what up, dude? He said RMQ. What's RMQ? Adobe. Hey, what up, King? Remind me, I type in RMQ. Unfortunately, I can't find that. Oh, TMQ. What? Okay, TMQ. Trilogy Metals. So it looks like another rare earth mineral play. Let's see if there's any news. Trilogy Metals cashes out. Oh, well, executive selling. I don't doubt it. Is there any intelligent comments down here? No. What is this? Rare. I don't care. Okay. There must have been some sort of good news here, because if you go to the revenue, there says 0 because they've never sold anything. They've never sold a product or a service. But a phenomenal balance sheet. Wow. No liabilities at all. So it's okay. They can they're losing $1 million in net income a quarter. Big whoop. They have the cash for that. So anyway, maybe their assets got more valuable just with the whole industry. I appreciate your thoughts. Hey, no problem, Rocky. Buzzer said, was good with you. We are locked in on the markets. Absolutely, Buzzer. Yes, sir. Would you start a position in Spotify if we drop more? Not Spotify, just because I love their numbers, but I don't like the fact that they don't own the music and they have a low moat with I use YouTube Music, and I used to have Spotify. Spotify has YouTube Music has copied what Spotify does and has almost made a better platform. And YouTube Music is free with my YouTube Premium subscription, so I just use it. Amex is great. Corps and high-income consumers. Yeah, I agree, JC. Amex is great, and you get the yield. Good dividend growth company. Luke said Grab stock. Yeah, let's do Grab. This is a cool Uber, international Uber play, as I like to call it. Oh, yeah, Oklo. Yeah, I don't love Oklo. Maybe we'll get to that one, but that one is soup. It should be cut in half, in my opinion. But check out Grab right here if you're wondering what this company does. They do exactly what Uber does, but in all these other countries. Notice the US and Canada aren't on here. Malaysia, Indonesia, Singapore, Philippines, those are their top countries. And what's so smart about Uber was that the fact that they took a stake into them. Uber now owns 13% of all the shares. That gives Uber instant international diversification. And also Toyota Motor owns 5.5% of all the shares. So they're kind of backed by some good people. They're net income positive every quarter. They're very growthy, like 820 mil of revenue. Analysts expecting 934 mil of revenue in 2 quarters. The free cash flow is really good. So this one checks the boxes. And maybe I'd have to double check probably what the 2-year out multiple is to see what the valuation is. But I would put them on the watch list. I like that one. It's like international exposure. It's a commodity everyone needs. It's proven that Uber works. People want stuff delivered. People need ride sharing, and I guess people all around the world should. Here's the thing with Oklo. Yeah, here's why I think this one's a bit bubbly. If you, you know what? I'll talk about this stock and then I'll recommend you a better one. If you're gonna buy Oklo at all-time highs, check this out. So this is if you look, here's why I don't like this one. If you look in the top right, the market cap, they're a $21 billion company. So this whole entire company is worth $21 billion. You know, I know, I like to think I've seen a lot of companies out there. I know what a $21 billion company should look like. And this is weird. If you go to revenue, it says no data because they've never sold anything. They're still a startup. They've never sold a product or a service. You know, they're actually trying to make these SMRs, these small modular reactors. It's a total proof of concept. Right now, if you didn't know, there's only 3 working SMRs, small modular reactors in the world, and none of them are in the U.S. So they're still years away, potentially 2 years away from any sort of any revenue, which is crazy. And if you're going to buy them at all-time highs, I'd recommend picking up CEG, Constellation Energy, instead at all-time highs. This is a proven company. This is what's crazy. Out of all the U.S. nuclear reactors, out of all the USA nuclear reactors, this company owns over 30% of them. It's the largest pure play for nuclear energy. There's no close second. Not a close second, not even by far. Vistra Energy owns 3 reactors, but they own nearly. This company owns 22 reactors, maybe 23 with the 3 Mile Island one, but Vistra Energy owns 3. That would be a close second. But yeah, Oklo, wouldn't buy that one if you want exposure to nuclear. Get CEG. CEG does buybacks, dividends, synergistic M&A. They're the best. They're the best. Treat said, yeah, hey, Treat, I love Grab. They're cool. YouTube music is good. Yeah, I do like YouTube music. Yo, Welltower. Hey, there's a cool, I love senior housing REITs. So Welltower is a great one. And another one is CTRE, Care Trust REIT. Both of these are great ways to get exposure to senior housing triple net leases. So if we go to their dividends right here, you get a 3.77% dividend yield on CTRE, and check out the growth here. This is insane. The revenue's up 63 after 33 after 8. So first off, there's my old YouTube video about them. I guess no one's left a comment on them since. But anyway, yeah, no one knows about them. But yeah, revenue's up 63%, but they have a fortress balance sheet. This is the best part, is how under leveraged they are. Like they literally, I think they're like EBITDA to debt is like 1 or 2. In like Realty Income, ADC, like the industry average is 4 to 5. Like Iron Mountain, IRM is a 4 to 5 EBITDA to debt ratio. This one is like a 1 to 2. Industry low debt, high yield, and that's your senior housing care. Another one is Welltower. This is actually the largest REIT, I think, by market cap, maybe second or top 5 for sure. They're a $110 billion company. What does this one do? Senior housing operations. You have triple net leases, and you get this one has a lower yield, it's 1.62% yield. So that's why I recommended CTRE. But it's a way to get exposure to this one, but with the higher yield. You know, this one has a 1.62% dividend yield. This one's just as growthy. Revenue's up 39, but the other one just as growthy with the higher yield. And I think less leverage. Hopefully that was helpful. There you go. Ethan said, if you looked at UUU, how much is YouTube Premium? I think it's like $16 a month for the one I have. There's like YouTube Premium Lite, but I have just normal YouTube Premium. It's so useful just because of how much I'm on YouTube. Hey, by the way, best way to support me is just watch the stream on YouTube. I'm streaming on YouTube and TikTok right now. We have 205 viewers on TikTok and 50 on YouTube. I'd appreciate it if y'all would go from TikTok to the YouTube stream. I'm trying to build up my viewer count there because literally out of nowhere, TikTok removes my stream from the For You page recommendations. They take down my streams. They've been better with it recently, so shout out to TikTok. But let's look at UUU. I believe, yeah, this is a uranium play. A lot of the uranium stuff. By the way, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, just type into YouTube Nathan Robert. Ooh, D's. We'll look at UPS and FTAI. Yo, Fork, that was my bad. We definitely got to get to FTAI. Remind me, spam me. And PANW. Hold on, PANW. We for sure have to get to that one. But yeah, this is one of your uranium plays. Yeah, look at that. 93% of all the revenue comes from the uranium. One reason, you know, the rare earth mineral stocks have been rallying as well as uranium, because right now we're no longer buying our uranium from Russia and all these other foreign countries. We're actually trying to source our own uranium from Canada and the US. And so we've been investing in our own uranium infrastructure, and there's been a lot of executive orders stimulating uranium and nuclear reactors. So it's easier to, nuclear reactors are coming back, and nuclear reactors are powered, you know, by uranium, that yellow cake uranium, you know? So, hey, at least this one has some revenue. You know, there's a lot of uranium play. The whole uranium, here's just uranium ETF. URA is the global X uranium ETF. And as you can see, it's just done phenomenal. I'm a fan of picking and choosing uranium. The best uranium play out there by far is CCO by far, the best uranium play is CCO. But again, it's tough buying them at all-time highs. I don't know why they have Oklo in the watch list. I guess that's the nuclear play that would use uranium. But anyway, hopefully that was helpful. Probably not. If you direct people off platform, yeah, oh yeah, hey, Sleep, I probably shouldn't say that. Yeah, I get in trouble for that. UPS stole a plant I had on my patio. No way. Is that? I guess that was a UPS, just the driver. Oh, hey. I keep Panda, yo, Palo Alto Network. I'm going to forget so many stocks, but I want to just get to all these. I love this. So here's a stock I think is a dividend trap. I kind of just wanted to go over this one to warn you. I would stay away from this one. Here's why. A lot of people look at this and you're like, wow, hold on, a 7.9% dividend yield. That's insane. But you buy it for the 8% yield, but then you lose more than 8% of your money in stock price depreciation pretty much. Here's how we can check if the dividend's safe. Let's just go do our math for ourselves. First off, their average daily parcel volume's down like 10% year over, or I think it was 8% year over year. But if we just look at the lifeblood of the company, the sales, the revenue, this is not good. The revenue's down 2.7%. So the sales are down 2.7, add inflation to that. And the net income is down by 9. So they lost their margin, their net margin fell, low margin industry. But look at this. Here's the bad part. They made $1.28 billion in net income, but they actually lost money. Here's how. So they made $1.28 billion in net income, but remember they pay a dividend, a 7% dividend, and that dividend cost every quarter $1.35 billion exactly. So they literally couldn't afford the dividend this quarter or last quarter. Growth is gone. So I can totally understand why the stock is at this new 52-week low level right now. I just like looking at the numbers because if you look at the numbers, it usually explains why a stock is either doing really good or doing really bad. Here's a stock that the numbers explain why it's doing really good. If you're looking for an aerospace and defense company, this is one of my top picks out there. And even though they've had the huge rally, they're worth $16 billion. They're probably not worth buying with a huge size position yet, but check this out. Here's what's so cool about FTAI. They're an aerospace and defense company. If you go to their aerospace products, this is insane. The revenue is up 99%. After it grew 164, after it grew 250, like the revenue literally hits a new record every year, every quarter. The aerospace products, so like the orange lines of the analysts expected 542. They reported 670. I mean, the growth is insane. And they're making net income. What's the net margin on that? 25% net margin, net record margin. They're making easy 100 mil a quarter. So I love this one for the growth. Super growthy company. Hey, what up, Art? He said Restoration Hardware. Should we pull up the furniture stocks are a tough, they never outperform the S&P 500 in the long run. What do you use to trade? Oh yeah, hey, by the way, if you want to get, I'm on a brokerage right now. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. So it's an affiliate link, full disclosure. So if you deposit $100, we'll both get some free stocks. But it's my favorite brokerage, lowest fee, costs nothing, no monthly fees. Like Robinhood, you have to pay $5 a month, but there's no monthly fees or anything, no commissions. So if you do, I keep my idle cash in here too because you earn the APY. Anyway, let's get back to Restoration Hardware. This one hopefully furniture sales will go up in a lower rate environment. I do have a better furniture play for you. Let's see, net income. Actually, I like the fact that they are making net income every quarter, 50 mil. Ooh, they have a bit of debt. They have a bit of leverage. But my favorite play is actually Ethan Allen. They do the exact same thing. It's ETD right here. Ethan Allen Interiors. Again, these don't really outperform in the long run, but with this one, you get a 5.79% dividend. Actually, this one's not that great either. Actually, the other one, Restoration Hardware. Actually, this isn't as good as I thought it was. Never mind. Actually, just stay away from the furnitures. You want to swing trade those. As rates go lower, that one should go due. And actually, we can see the lower interest rate probability right now because if we go over here, this is what's so cool about this. So literally on October 29th, literally less than a month, on October 29th, there's a 98% chance of a 25 basis point cut. And if we go to the next meeting on December 10th, literally there's a 98% chance of another 50 basis point cut based off the Fed dot plot trajectory. So literally by 2026, rates are going to be 75 bips lower. So that should help out the interest rate sensitive sectors. Oh yeah, there's a bunch of cool sectors you can learn about on here. This is how I learned about a new stocks. I want to do a stream one time where we just go over here and look for new stocks to find. We'll look at weird sectors that we haven't before. We'll look at I don't know, drone concept stocks. I don't know. And we'll analyze them to see if they have good fundamentals. Oh yeah, hey, by the way, this is a brokerage I'm on. If you want to get it, it's where you buy stocks on. It's in the link tree in my bio, the very first link there if you want to get it. Let's see, thoughts on commodities. I don't love commodities, but the way I bet on agricultural commodities is DE John Deere. It's my favorite way to bet on it. So John Deere, I think, will just like probably return 10% a year. I'm actually going to re-add them to the top of my watch list. I'm probably going to add them to my Roth IRA. Tell me if AutoZone's a good buy. Ooh. Alien said, wait, let's look at WREE. I looked up WREE. I can't find that stock actually. Sorry there. Wait, I wanted to get to this one real quick. AutoZone. So AutoZone's a unique company, you know. They're known as recession resilient. Like even in a recession, you know, you have a flat tire, you need an oil change, or something happens to your car. You know, you got to get that fixed, or else your car just won't work. Your AC needs fixed, or you know. So AutoZone has just this insane performance these past couple years. They've had a little bit of pricing power, but this business is boring. Like they're not growing like rapidly, you know, single digits, you know, mid single digits, you know, 5% revenue growth, 0.6%. So low revenue growth. So why is the stock doing so good? It's because of the share buyback program. I kid you not. Like this company prides itself on share buybacks. If this company were to convert the money they're spending on buybacks to dividends, you would get like a 5% dividend, but they literally buy back like 5% plus of the whole entire company a year. So that's what's insane about them. So yeah, their EPS growth, their total shares outstanding just spiral down every year. I don't know if it's a good buy here, but they are a good buy. Like I would trust my money with them. Cost said UPST. That's Upstart. Hey, this is that auto loan company. They're like some AI auto loan company website. Hey, yeah, this is not a website. This is actually a brokerage. If you want to get it, it's in the link tree in my bio, the first link there. It's where you buy stocks on. But yeah, Upstart right here. Check this out. Here are their platform referral fees. This is why I actually like them. Oh, hey, watch out for that guy in chat there. Hold on, let me report that. Okay, but yeah, Upstart right here, the revenue is super growthy. It's at a new record, up 105% year over year. So that's what's insane. You know, we just go to revenue right here. Revenue went from 127 to 257, a double year over year, and they made net income on that. So they're basically transitioning from a company that used to burn a bunch of money. You know, they used to lose a lot of net income every quarter. Now they actually made net income this quarter. So I do like the growth there. And they're beating on expectations every quarter. You know, they expected 225. Now they reported 250. They're beating on every metric every quarter. So they are exposed to auto loans, and I don't love that industry, but I can see why they've kind of done good. They're kind of trending down now, though. I like the growth. They want to see them keep up that growth. Can we do PSKY? Hey, yeah, that's that. My bad there. Yeah, sorry if I don't get to every stock here. I do try and get to all of them. I only try and spend a minute on every stock. So let's see here. Here's Paramount Skydance. Do you have a Weeble? Hey, I do have a Weeble account as well. I do like Weeble. Yeah, if you want it, you can just type into Google Weeble or type it in. Okay, but this is not Weeble right here. This is Moomoo. But here's PSKY. This is Paramount Skydance. This is an $18 billion company, and they just merged with the Nickelodeon company. I forget the name. Anyway, or Cartoon Network company. I don't remember the name, but they just merged with some other streaming services. And yeah, if we go to their DTC, direct to consumer streaming service, this has kind of been what's really growthy about them. You know, the revenue's up 15% year over year. After it grew 13, after it grew 49. So they're just holding on to this growth and continuing it on their streaming service. And they just merged with that other company. Let me see if there's any news down here. Oh, no news. Anyway, well, Warner Bros. Discovery, there's a lot of merger news around them. So, hey, what up? Strong said Super Microcomputer. I do own Super Microcomputer. They've actually been one of my better performers. We're up 98% on them, but I'm actually not going to recommend this stock. I honestly think they'll probably go back down to this like $40 level. I do like the OpenAI AMD news, like OpenAI, Oracle. A lot of these companies are plowing chip orders, and you know, Supermicro is the one who actually installs it for you. And again, they just do a commodity. And that's the issue I have with them right now is actually the margin in the competitiveness right now. We go to their net margin, margins have collapsed. The net margin is down 39% after it fell 37. So only a 3.39% net margin. So this is the good news. The revenue is really growthy. The revenue is up 7.5, but the net income is down by 34 because the margins fell so much. So we really want to see the margins come back and the net income start to grow again. So that's why I wouldn't touch this one probably till like $40, but I do own them, but I want to see them do good, but I don't have too much trust at this price. Hey, what up? Benton said ASTS. Hey, if you're a shareholder of this stock, the next 6 months are super crucial. So here's what I mean. They're basically transitioning from a revenue-less company to a company that finally have some revenue. So, there we go. So if we go to the revenue right now, the revenue is pretty much nothing, $1 million, 700,000, $1 million. So they have no revenue right now, but check out what the analysts are expecting next 2 quarters. It's 1 million this quarter, but the next quarter analysts are expecting 22 million and the quarter after 35 million. So there's going to be a real spotlight. I think it's really pricing in that growth right now. So the risk reward probably doesn't look great right now, but expect a volatile hold the next 6 months. What happens is, hey, by the way, this is a software or it's a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. It is an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. Is Nvidia cooked? No, in the long run, no. The circle will keep them. Can you show your never sell stock portfolio? Yeah. Oh yeah. Here are all the stocks that I own in here. Yeah. Hey, sorry. Yeah. Johnny, what up, man? Hope you're having a great Sunday. Hope everyone is. By the way, if you want to hit the follow button, we stream every Sunday this exact same time. So yeah, my most recent purchase in here was Ferrari stock. We bought the dip on Friday, and we bought some MUSA too. We actually sold DocuSign. We kicked the boot to DocuSign. I haven't been too happy with this company. Literally, OpenAI came out with DocuGPT, a direct competitor to DocuSign. They fell 12% that day and then fell another percent. After they fell, after this huge dip, literally the CEO, CFO, and COO all sold millions of shares. I mean, it was a terrible look. So I'm like, I'm just out of here. This is a low moat, no moat company, no IP, no patents really. So I just decided to sell DocuSign. But I sold them for a 70% gain, so it's not like and it was long-term capital gains, so the gains were tax-free too. Should I sell RILY? Is that O'Reilly? If that's O'Reilly, oh no, this is, I don't know what this is. Yeah, let's check this out, Dylan. So this is a really risky one. Oh, hey, we got to look at FT&T as well. So if you look at the top right, they're only worth $170 million. So the whole entire market cap is only $170 million. Let's see what their sales are. So yeah, I can totally understand why if we zoom out on the weekly, this stock is at an all-time low because look at the revenue. This isn't really what you want to see. The revenue's down 35% this quarter. Last quarter was down 45. Last quarter was down 63. And oh, look at the balance sheet. No. So look, they used to have more assets than liabilities. First off, the assets trend down every quarter, and now they have more liabilities than they have assets. So they must be burning through net. Yeah, wow, a couple $100 million a year. Yeah, I try and get out of that one. That's unfortunate. I can totally understand why they're at that huge dip. Hey, what up, Joel? What up, man? What up, Michael? What up, Ethan? Hope y'all having a great day. I've been in your live, and you still haven't recommended one stock. I recommend it. Hey, what up? Well, hey, Larry, if you got I don't know what you mean there. If you got a stock you want me to look at, let me know. I'll try and see it for you. FT&T, let's get to Fortinet right here. So this stock right here is a cybersecurity play. I think like a good chunk of the S&P 500 actually uses their software. So if you look at a lot of software names like Salesforce, Adobe, a lot of them are getting hurt by the AI thesis, but I really think like cybersecurity is immune to that. And I love subscription model companies. Check this out. 40% of all the revenue comes from their subscription model, and it just hits a new record every year, every quarter. I mean, if you go to the annual trend, it's at a new record. It's all reoccurring business, and they're not just making revenue every quarter, but real net income, after-tax net income, easily $400 to $500 million net income a quarter. So, hey, that's great news, that net income there. All right, hey, what up, Larry? Larry said pack stock. Okay, let's do it. So this is Ranpak Holdings. Let's do it. So unfortunately, this stock is lower than it was in 2018, close to an all-time low. So let's see if we can figure out what happened here. There must have been some sort of numbers investors didn't like. So They are growing revenue, so that's the good news. The revenue growth is back, 6% revenue growth, but they are losing net income every quarter. That isn't great news. So they did make net income that one quarter, but they're usually losing 9 to 10 mil a quarter. What's the market cap again? So look at that. They're losing 9 to 10 mil a quarter, and the whole company is worth 400 mil. So if they lose 40 million a year, that's 10% of the market cap. So we really want to see this company get profitable fast. And it doesn't look like the trend is getting better with these declines. So I can see why they haven't done too great with those net income losses. But the growth was all right there. All right. Let's see. Wait, Ethan said HIS. Is that a stock? Wait, I can't find HIS. John said ARU. Let me know which one you're talking about. It must be this. It's either Australian, FUTU rare earths. So yeah, a lot of the rare earth plays have been going up. So yeah, it's an Australian company. They have no revenue or anything. I wish I gave you more thoughts on them, but it sounds like hopefully they can momentum on that. Can you do Coca-Cola stock? Hey, Johnny, let me know which one you're talking about. Do you want me to do the normal Coca-Cola stock with the 3% dividend, or should I do the Coca-Cola bottler? Like, look at the two different stocks here. Coca-Cola is at the bottom, the orange line, but I actually own Coca-Cola Consolidated. This is the Coca-Cola bottler with a way lower dividend. You only get a 0.6% dividend, but notice the payout ratio. This is what I love to see. Life right here. This is why you notice the payout ratio. You get a 0.6% yield, but only a 5% payout ratio. Like, just for perspective, let me compare that to Apple. Remember, 0.5% or it was a 0.6% dividend yield and a 5% payout ratio. With Apple has a lower dividend yield and 3x the payout ratio. I mean, that's just from a dividend point of view. Obviously, we won't compare apples to apples or apples to Coke here, but I mean, I just like them because they're doing major share buybacks. Like, here's the crazy part. Look at the net income here. They have no net debt. Look at this. If we go to the net income is up by 8.4. Net income's up by 8.4, but net income per share is up by 16 because they've bought back 8% of the company in the past year. And whenever they buy back their own shares, that's 8%. Basically makes the stock price go up by 8%. I mean, I love them. Okay. CIBR stock. What's this one? CIBR. JEPQ. Am I muted? No, you're not muted. I can see you, man. What's up? Hey, sorry. Yeah, hey. I feel bad if I don't get to everyone's stock. I really do try and get to everyone's. And I try not to. Okay, but here's CIBR. This is an ETF right here. This is a cybersecurity ETF. I love this industry. Let's see what it owns. So it owns CrowdStrike, Broadcom. They actually do have a cybersecurity software. Palo Alto Networks, Infosys, Cisco. Cisco owns they own Splunk. I love Cisco. Actually, if you're looking for a cybersecurity with a yield, 2.4% dividend yield on this company. It's a small portion of their business. Splunk is right here in their security business, but check out how it's rocketed up year over year. That's from the Splunk acquisition. I actually used to own Splunk stock before they got acquired by Cisco. And Fortinet's in there too. So actually, I'm going to add CIBR to the watch list. This is definitely one of the better cybersecurity ETFs out there. Oh yeah, hey, definitely. Hey, bye. Yeah, I'm not an expert. I'm just a college student. What app are you using? Oh yeah, hey, if you want to get this app I'm on, it's the software I'm on is in the link tree in my bio. First link there. What up, James? You said Kraken. Hey, what's the ticker symbol for that? Joel said COHR. This is Coherent. Hey, this one's nearing an all-time high right here. So, congrats if you own this one. Thales is a mythical pool. Hey, Chaz, Thales was in that cybersecurity ETF right there. Should we look at them? I've never heard of them actually. So yeah, if we go, this is the one I remember looking at this company. The one growthy part about this stock that I love is their networking business. Check this out. Hit a new record for the year, but on a quarterly basis, like check out it's at a new record. It's up 48%, 44, 55. So the growth has been really good the past year. But if we go to their other businesses, so the networking side has been super growthy. But if we go to like their lasers, these businesses are actually down. That one's down 0.3 and their materials is down as well. So, when we go to their combined revenue, just total revenue, it's only up 16%, but that's still good growth. I think that might have even beat expectations. Yeah, so that did still beat the analyst expectations. So anyway, you're watching that networking growth there. All right. Gabe said, can you check pins? Yeah, hey, Pinterest right here. They're actually in my debt-free watch list. I'll actually pull that up right here. If you go to our zero debt watch list, check this out. Every stock, actually, I got to remove GameStop. GameStop, when I first added them, had no debt, but they just issued like 3 billion of it. Yeah, Duolingo, Pinterest, DocuSign, Zoom, Opera GX browser, Reddit, Yelp. They're all debt free, and Pinterest is one of them. Pinterest hasn't done too well. Pinterest is the same price that it was in 2019, so they haven't been doing too great. But here's a cool metric we get to see, and I like this. Here's their they're not just active users, but their monthly active users are at 578 versus 522. So their active users went up a good chunk year over year. If you look at the revenue, this is good growth. Double digit revenues up 16. They are still see this quarter where it says they made 1.8 billion in net income. They didn't actually make that. They made 260. And actually they make, remember how I said they have no debt? They really have no debt and a bunch of cash earning interest. They have $2.6 billion of cash, and they keep it into these 1 to 3 week treasury yields. It literally earns them up here at the top 28 million of interest a quarter. That's how, if you look at their core business, their underlying, the operating profit is the core business, basically money they make. It lost money. It lost $4 million. Remember, operating profit does not include taxes or interest, but the net income, the GAAP net income does. So that's how they made 40 million in net income, but lost 4 million of actual operating profit because the interest on their cash. So they're literally, that adds so much to the bottom line. That's great news. So anyway, I like the growth here, but they're interesting. I don't know if I'd expect them to outperform. Wait a minute. Is this Bloomberg? No, hey, this is a brokerage. If you want to get it, it's in the link tree in my bio, the first link there. And hey, shout out to Zellerate. No way. With the 14 czar. No way. Heck yeah. Hope you're having a great Sunday, my friend. He said ENVA. Let's do it. Oh, then we can maybe get to JEPQ, SoFi, ST. I want to get to all these. Remind me to get to them. Hey, what up? Hey, Free Me. What up, dude? Happy Sunday. What up, Free Me? Unboxing. Yeah, SEZL. I'm looking to buy SEZL, or more Dave. What up, Israel Hernandez? Love your channel. Hey, Rocky, thanks so much, man. Yeah, if you want to hit the follow button, we stream every Sunday this exact same time. We're actually probably going to be doing another live stream in exactly 7 hours from now. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Please watch out for people impersonating me. But let's get to ENVA. Again, shout out to Celebrate, man, with the 14 czar currency. Thanks so much, dude. That news made my Sunday. So same with Maddie. Thanks. Shout out to Maddie if you're still here. But here's an Innova stock. They're a $2.6 billion company. And look at the PE ratio. They're trading at 11 times net income. The industry average is 29. Let's see if that's real or propped up on some adjustments. So consumer loans. Also, it's a loan company. And the growth has been really good. It's up 16% after it grew 22, after it grew 15. So that's good. And then they also have the small business loan, the SBA loans. That's up 29 after it grew 32. You know, they're probably getting a lot of loans right now because in this high interest rate environment, it's hard to get access to capital. So people are going to companies like this. And whoa, check out the projected growth, 740 this quarter. They beat on expectations, but it's supposed to be 860. Let's check out net income right here. Oh, wow. No. So remember how we were looking at the net income multiple? Again, the PE ratio is just the net income multiple, the yearly net income plus any share buybacks or dilution. And they're traded at 11 times net income. And that's real, not propped up on some one-time adjustment. They are making, what's their margins? So 10% net margins. Margins grew 16% year over year. This is great. 60 mil a quarter. No dividend, but let's see, they're probably not doing share buybacks yet. Net income's up 41. Whoa, they are doing share buybacks. They bought back 6% of the shares. No way. Hold up here. If we go to the net common stock issuance, look at this. They're shareholder friendly. They're literally spending 20 to 50 million a quarter on share buybacks. Hold on there. Hey, Celebrate, you just basically donated me 14 czar because more than that, because I just added them to the watch list. So thank you very much there. I do really appreciate that. I am at SCZ. Yeah, SCZL looks, that might be a competitor, SCZL. Ishwar said ST stock. Let's do ST right here. This is Sensata Technology. Oh, I wanted to get to, hey, someone said something really cool about a cybersecurity stock. Like they had a deal with the government. Wait, Theos is known for military defense, but it does have cybersecurity sector. Oh, okay. That's cool. So Sensata Technology, let's check out this company right here. They have a dividend, a 1.7% dividend yield, performing sensing. So this might actually explain why the stock has not done too well. Their main business is down 10% year over year. And then Sensing Solutions is up by 8% year over year. So I guess when we combine those two businesses, the total revenue is down by 8.9 after it fell 2.5. So we really want to see the growth come back. So basically, that might explain why the stock is done way worse than the S&P 500 because the growth is gone here. But they are still making, yeah, they're pretty much making 70 million in net income a quarter right now, which is still good. They still have that net income, but they're not growthy. Hmm. Yeah, I'd be careful with that one. Affirm, hey, that's the buy now pay later stock. I've looked at Chime or no. What's the other buy now pay later that just IPO'd? Klarna. I actually like Affirm more than Klarna, unless the numbers change. Hey, try not to spam there. Hold on there. Yeah, hey, we'll try and get to that stock. Don't worry. Uh, but here's Affirm Holdings right here. It's that buy now, pay later company. And this one finally is profitable and they're really growthy. If you look at the revenue's up 32, after it grew 47, after it grew 23, after it grew 39. Like they're just on a streak right now. A lot of people are using buy now, pay later, which I don't recommend. Try not to do that too much. But look at they're finally net income positive. You know, in a recession, this stock will get smoked. I feel like no one will just pay back these loans, but that's why they're actually selling the loans. But look at this. They're actually net income positive for the past 4 quarters. Klarna is not net income positive yet. So that's why I actually like Affirm. Why don't you on TSM? I feel like they have the biggest moat. Yeah, I love Taiwan Semiconductor. I really do. What up, Steven? He says, we got to get to Taiwan Semi. There's some, Eric said YDDL. And then I want to get to URG. Boat said CCJ. We'll try and get to CCJ. I want to get to all these. So, this company is IPO'd, it looks like. So, they've only been public for 2 days. Let's see what they do for fun. Copper, why did I pronounce it like that? Copper alloy ingots and aluminum alloy, brass alloy. So they sell basically rare earth minerals. I guess they picked the perfect time to IPO. They did that on purpose. So, hey, there's your copper play. Let's see, URG. What's URG? So UR Energy. So wow, this must be a uranium play or something. They've done great the past couple months here. Let's go figure it out. So yeah, uranium. So uranium company, do they have revenue? They do have revenue actually the past couple quarters. That's great news. They are still losing money every quarter, but that's no big deal at all. So yeah, I'll add them to the watch list just to see if they have any real assets later. But yeah, that could be a uranium play. You know, they really followed the momentum of the whole. Like if you type in ticker symbol URA, that's just the uranium ETF right there. It's done phenomenal. Oh yeah, JEPQ. This is your covered call ETF. So this sells covered calls on the Nasdaq, and basically this won't outperform the Nasdaq in the long run. But so you're buying this to maximize your income. If you look at the dividend, you get a 10.6% dividend. And it's actually, you know, they just sell calls and then all the money they make from calls, they give to you in a dividend. It's actually called distribution. So whenever you receive the money, it's taxed as short-term capital gains. But yeah, you buy that for they pay a monthly dividend, which is cool. Wait, CCJ. Oh, Cameco. Yeah, hey, this is this is my favorite uranium, like individual uranium play out there. They're the best, like the best. You get a small dividend too, but yeah, uranium is like half their business. They make good net income. They made 230 million net income this quarter. Like they're making good. It kind of was an adjustment, but they're actually making easily 100 million of net income a quarter. The sales have been so growthy. Revenue's up 47, and this is a Canadian company, but we've converted it to USD, and it's still super growthy. Really good balance sheet as well. Really good net income, 100 mil a quarter should be. So CCJ is my favorite one. Yeah, let's look at SEZL. Here's another fintech play right here. So this is a financial stock. Oh, we'll try it. Hey, someone said QQQ. The better play is QQQM. Oh, remind me to, hey, CIP, remind me to look at SoFi. I really want to look at SoFi later. One of my best performers out there. So Sezzle right here, this is your fintech. Not financial advice. I would put this on your watch list if you like these kind of stocks. I'll show you the numbers for yourself. But check this out right here. The revenue is super growthy. I mean, the revenue's up 76, after it grew 60, after it grew 25. So revenue's really growthy. But out of this 98 million of revenue, 27 million of it was net income. And it says the net income was down 7% year over year. They had a one-time adjustment this quarter. They didn't actually make 29 million, so it makes it look negative year over year. You really look at the operating profit, so it actually doubled. Their profits doubled from the previous year. They have insane net margins. This is the best part. Literally 25 to 35% net margins. So I love Sezzle. I actually own Dave, but both are really good. Ivan said Nvidia. Yeah, let's do Nvidia. So Nvidia stock. Oh, why QQQM? So yeah, QQQM has a lower expense ratio than QQQ. It's the exact same thing. So we'll get to them after this. Would you recommend buying put options on the VIX? Oh, that's really risky. Hey, that could be an interesting swing trade there, Aiden. Doing options on the actual volatility. But here's Nvidia right here. Obviously we know Nvidia. They, huge deal with OpenAI. They have a huge 24% PC GPU market share. Their main customers are literally the Mag 7, the cash-rich companies like Microsoft, Amazon, Google, Meta, Oracle, OpenAI. So Nvidia can raise prices tremendously. So if you go to the revenue, their total revenue was 46 billion. Out of that 46 billion of revenue, 26 billion of it was after-tax net income for them. Literally insane, 56% net margins. They just took a stake into Intel. They have a stake into OpenAI. They have a stake in XAI. Nvidia is so big that they also own some of their own individual companies. Actually, if we go over here to the portfolio, we can see the Pelosi portfolio and all that. But Nvidia is so big, they own a bunch of individual companies like CoreWeave, APLD, ARM, Nebius. So pretty cool. Okay. Let's see. There's a stock. Oh yeah. Oh wait. Oh yeah. Let me go to QQQM real quick. So if you go to the QQQ, this is QQQM. It's literally the exact same thing as the QQQ, but with the lower expense ratio. So for every $1,000 you put in, you save $15 a year in expense ratio fees. And I kid you not, it's the exact same ETF. Both are run by Invesco. So both are run by the exact same people, just with the lower expense ratio, exact same NASDAQ 100 strategy. You can look, both of them are nearly identical in their top weightings. The performance are identical. The reason they market QQQ is because they make more money that way. Why would they market QQQM? They make less. So let's pull up SoFi right here. SoFi is a company that I own. I'm up like 300% on them. And they're not just up crazy because of momentum. Well, partially, but they're up a bunch because they have great fundamentals. They're extremely growthy. If we head over here to their financial services business, they're a fintech right here. Their financial services business is extremely growthy. It's up 105, after it grew 80, after it grew 222, after it grew 400. Like, it's insane, the growth. No analyst expected this. We can actually see the analyst expectations. Analysts expected 804. They reported 858. Every quarter they beat on their revenue. Every quarter they beat on EPS, which is net income. And every quarter they beat on EBITDA. So I really just think people are taking SoFi serious, making 100 million net income this quarter. So yeah. What app or site is it? Oh yeah, hey, by the way, this is a brokerage right here. If you want to, it's where you buy stocks on. If you want to get it, it's in the link tree in my bio, the first link there. It's an affiliate link, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. But actually, this brokerage I'm on right now, this is their stock publicly traded. First off, like, even if this brokerage I'm on were to go bankrupt, you're still FDIC insured for $250K. But it's good to see that the brokerage I'm trusting my stocks with are doing great too. So this app I'm on, here's their stock. They made 330 million of after-tax net income this quarter. Like, it's insane. The revenue's up 69, net income is up 111. So they're actually expanding margins. These brokerages, just like Robinhood. Hey, TEBL. If you go to the link tree in my bio, I think it's like the 6th link. You can get this in Canada. It should say like get Moomoo in Canada. You actually can. So yeah. But basically these brokerages make a lot on commissions and also interest income. If you go to their interest income here, it's up 43% year over year. So if you go to the middle of my screen right now, I have $975 of cash and it earns a 3.85% APY. But oh yeah, hey, thanks for that, Brandon. Let me get rid of that. Yeah, hey, thanks so much there, Brandon. Thank you. Um, all right. So, hey Brandon, you know what? Do you want to be a mod? Actually, you know what? I'm gonna just trust you. I'm gonna give you mod. Thanks for that. All right. So anyway, uh, let's see here. Why is FUTU down so much? Oh yeah, all the brokerages, all the fintech stocks were down bad on Friday. Like if we go to, I do. By the way, full disclosure, I do own FUTU stock. Check this out right here. FUTU. I have 8 shares. Yeah, if you go to Robinhood, I own Robinhood as well. Robinhood was down 8.85% on Friday. You know, a lot of basically the market was down on Friday because of the tariff stuff. Yeah, dang, SoFi fell 8%. Luckily, we have such good cost bases. But yeah, we do have. Yo, by the way, yeah, here's my Weeble portfolio. By the way, I haven't gone over this in a minute. We've definitely underperformed. If you look in the top left, we're only up 17% all time, but we do have some good winners in here, like AMD, Robinhood, SoFi. I regret every share I've ever sold of a lot of those. And I also have Robinhood as well. Actually, I'll show you. I'll be really quick about this. Then we'll get back to the stock analysis. We were down 1.86% on Friday, but year to date, we're still up 13%. You know, here's my Meta. This is where I own my Meta, my Google, McDonald's, Constellation Energy. These are all my top picks in here. Hey, what up, Mills? What up? Hope you're having a great Sunday. You said HUMA. Is that Humana or no? Oh, there we go. It just went through. Okay, so is Ferrari stock long-term or short-term? Yo, my Ferrari position is a long-term hold. Yes, sir. So here's Humasite. This stock, unfortunately, is at an all-time low. Yeah, that's rough. If you look in the top right there, they're only worth $290 million. That's not, and they're at an all-time low. You know, market's pretty close to all-time highs, but they're at all-time lows. They're worth $290 million. Let's see if we can figure out what happened. So they're worth $290 million, and they have no revenue, or the revenue was $300,000. Actually, so basically for the first time ever, they have revenue. So 300,000 of revenue, and they lose 25 to 30 mil a quarter. Their leverage. So they lose 30 mil a quarter, and they're worth 290. So they lose 10% of the market cap a quarter. So they're having to dilute at all-time lows or issue debt. They're in a rough spot. I can see. Yeah, UiPath, I'd stay away from that one. UiPath, yeah, you're right. They're like a robotics company, AI company. Yeah, hey, IDK, by the way, speaking of Ferrari, I did just start a position on them for the first time on Friday. Check that out right there. Wait, let's see. Brandon, what did he say right here? He had a stock he wanted me to look at. I don't know where it went. Oh well. Oh, FHN, there it is. FHN stock. What's this one? First National Horizons. So, this is the bank. Yo, I actually owned this company before they were getting bought out by another bank, but then they didn't approve the merger of the bank. So then the stock tanked. So I've had a history with them. They have a nice yield though. Let's see, a 2.7% dividend yield. It's basically a bank. Let's see. Consumer. Whoa, let me just go to revenue. Why does it look weird like that? So on an annual basis, so a bit slow growth, like it's down 1%, then it was up 1, up 4. So a bit of a slow growth, definitely way slower growth than like a JP Morgan. I don't know. Love the Ferrari play. I stashed a bit on Friday, top of the watches. Yeah, cool thing about Ferrari is, you know, a lot of their cars like are backlogged for multiple years. And like 15% of the revenue comes with their sponsorship revenue, where companies will pay so much money to like network at their races, to be a sponsor and to advertise their logos on the cars. It's like a package suite in one. They get their own room. And basically, whenever you advertise a Ferrari, you're marketing to the most high net worth individuals. Like, at the races and stuff, like the most important people that are hardest to market to. Like people pay for, they print money, you know, they're not just a car company, but the cars they sell for a huge premium. That's why I'm saying, you know, the people who are buying Ferraris aren't affected by tariffs, and also aren't affected if Ferrari has to raise prices by 10% because of tariffs. Ferrari can do it. I think their customers will do it, and they make 400 to 500 mil in net income a quarter, and you get a 0.9% dividend yield that they raise every year, and they bought back 1.5% of all the shares. By the way, if you like Ferrari, I just literally yesterday, if you go to my YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but just type in YouTube Nathan Robert. I literally made a YouTube video yesterday going into way more detail about why I bought Ferrari. It's a whole video. The whole video is just like this, where I'm on my screen like this, where I go over why I bought Ferrari, and I go over why I bought MUSA using this app. So anyway, Um, by the way, best way to support me is just subscribe to my YouTube channel. It's called Nathan Roberts. It's also in the link tree in my bio. But yeah, okay. Hey, Mark said, hey, what is your top financial indication of a company's overpriced or undervalued? It's the growth metric, like the PEG, price to earnings growth ratio. Um, like that Tesla's. Some companies deserve a high valuation. Some companies definitely deserve a high valuation. But like Tesla, it's tough to pay like that high of one. I think they're overvalued. Hey, what up? Mikey is on. What up, dude? Hope you're having a great day. Um, how long do you think the dip will last? I think we're almost halfway through this dip. That would be the hope here. So here's Dynatrace. Let's check this one out. I don't know if I've heard of them before. FUTU, Moomoo, or TariffLink, probably. But it's just the whole. How can I start learning? Yeah, hey, Andy. By the way, I don't sell anything. I have no course, book, or I don't teach. No private one-on-ones or anything. So I don't sell anything. But the best way to learn is just watch the live streams and check out my YouTube channel. But if you said you're getting into stocks, yeah, to buy stocks, you have to have a brokerage to buy stocks on. And I recommend, this is my favorite brokerage right here, lowest fee, doesn't cost anything. This brokerage I'm on right now, if you want to get it, it's in the link tree in my bio, the first link there. If you're on the YouTube, it's a link in the description. It's on my link tree first bio. It's an affiliate link too, full disclosure. So if you deposit $100, we'll both get some free stocks. So here's Dynatrace right here though. Let's check out this company. They've been flat for a year. Have they been like slow growth or no? The growth is there. Sales are up 19 after it grew 19 after it grew 25. So the growth is good. They're net income positive every quarter. Yeah, the profits just hit a new record. Profits are at a record. Balance sheet deleveraged. I mean, everything financially is headed in the right direction over here. I do wonder. I mean, maybe they have a low moat or something. Or let's see, what does the Morningstar research have to say? What's the bears? What did the bears say? Dynatrace is focused exclusively on customers with more than $1 billion in annual revenue, puts it at a disadvantage in compared to Datadog. Oh, so some kind of data analytics company. Anyway, interesting. We can also see the analyst price targets. You know, you can actually see like the individual analyst and their actual star rating. Sometimes you'll see an analyst with like a 1-star rating, and you're just like, why do they even exist? But anywho. There's Dynatrace. So let's look at Nike right here. Yeah, let's look at Nike right here. Sorry I didn't get to that one. So, oh, hey, what up, Clip? We'll maybe try and get to TWLO as well. But check this out. I actually sold all my Nike. There's my little sell order right there. I sold all my Nike at $79 because I didn't like where their numbers were heading. I liked their numbers at the time when I first bought them, but then I saw some red flags on Nike's numbers. And I normally don't do that. I rarely buy a stock and then shortly sell it after, but I decided to sell it at a Nike. And just fortunately, it happened to be well timed because now they're down a bunch. But here's the thing with Nike. Here's why I struggle to it's just hard to trust their numbers right now. If we go to the actually, they just reported earnings and the earnings did beat expectations, but the stock still fell. But in the quarter before today, like this is what the sales were down 12%, revenue's up 1%. But look at the net income. So if we look at the revenue, if we go to the revenue right here, the revenue is up by 1%, but the net income is down by 30%. And that wasn't some like one-time adjustment either. The revenue really fell 30%. That means the margins collapsed. The net margin fell 31%. Last quarter, it fell to a 1.9, and that was real. It really was only 1.9% net margin. But they made here's the thing. They made $727 million in net income this quarter, so $727 million in net income, and the dividend cost $600 million, so they were able to afford the dividend. As long as they're making over $600 million a quarter, it's good, but notice last quarter, they couldn't afford it, and they could just barely afford it. So I wouldn't trust this one too much. Okay. When did you start? Hey, I've been investing since I invested the basically week I turned 18. How about cat? So cat, yeah, let's do cat right here. Caterpillar. Yeah, hey, we're not going to look at BBAI. Probably. I don't see much value in that one. They have like one little data center contract. But here's Caterpillar right here. This is a lovely dividend growth company, in my opinion. You buy this one for the dividend. Oh, hey, remind me to look at Nebius. Hey, Moses, remind me to look at Nebius. I love that name. But yeah, Caterpillar, if we look at the dividend right here, you get a over 1% dividend yield. And look at how they raise their dividend every year. It went from $4, $4.20. Now it's $5.40. And it's over a 1% dividend yield. So, and the multiple's fair. They trade at 25 times PE. That means they trade at 25 times net income. You know, energy and transportation. I love how diversified their revenue streams are. Big construction projects use their heavy machinery, and the resource industry as well use their heavy products. So yeah, they're easily making over $2 billion in net income a quarter. They share that with you via dividends and share buybacks. So, whoa, they've bought back 3% of the company. Hold on, let me just say, remember they made over $2 billion in net income, and the dividend every quarter only cost $662 million. And notice this: the cost of the dividend went from $674 to $662. How did the cost of the dividend go down? Because of the share buybacks. They spent $3.7 billion on share buybacks just last quarter. And literally, whenever you buy back those shares, you don't have to pay dividends to those. So anyway, love the shareholder friendliness. I think they'll probably continue to go higher and higher. Why is Adobe? Hey, King, we'll look at Adobe. Hey, heck yeah. So sorry. I really do. All right. Why do you use other brokerages? Yeah, why do you use other brokerages when Moomoo has the best, lowest rates? Yeah, exactly. I found out about Moomoo last, but yeah, I have multiple brokerages here, and there's no burden of having multiple brokerages because it's just an extra 1099 form at the end of the year. It's all just an extra filled out sheet of paper that you just hand over. So there's no burden of having multiple brokerages. But yeah, I have a different goal with each portfolio. This one, if you look at the top, is called my buy and never sell portfolio. This right here is my risk on portfolio. We're only up 17% all time. We're up 10K all time in here. In our Robinhood portfolio, this is our dividend only account. Oh, we also have a Roth IRA. I'll go over that one too. We're kind of trying to bring the growth back to our Roth IRA. Roth IRA is just a tax retirement account, but basically this is our main dividend growth portfolio where we own Meta, Google, McDonald's, where we only own dividend stocks in here. Anyway, but yeah, out of all the brokerages, if I was just getting started today, I would pick this one right here. It's the most useful one, lowest fee, best brokerages. Like with Robinhood, you have to pay $5 a month to get the yield, but if you look at me on my screen, I keep my auto cash in here because you don't have to pay anything. I used to pay Robinhood, but now I don't with this one because earns a 3.85% APY. And there's a bunch of cool features. Like you can see all the like super investors portfolio. Like you can do the Nancy Pelosi tracker. You know, these are super investors. They have to make all their trades public by SEC law. And you can now like batch trade, follow them into their positions, which is kind of cool. You know, Warren Buffett's portfolio, Nvidia's portfolio, you know, Nvidia's big. And also some cool other, I'll be really quick about this. But last other thing, this is how I find out a bunch of new stocks. You know, there's so many like ETFs or like sectors you can find in here. Like they have a Fed rate cut beneficiaries, dividend aristocrats, companies that have been raising their dividends for over 25 years, never had to cut it once, weight loss prescriptions. So they have so many different like assets that like you can find. Anyway, yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, the first link there. It's where you buy stocks on. So, okay. Oh, but I was wanting to go back to the interest rate cut thing. Yeah, super quick. Yo, speaking of this, if you scroll down here, you can see the interest rate cut probability. And literally, on October 29th meeting, there's a 97% chance of a 25 basis point cut. And on December 10th meeting, another 98% chance of another 50 basis point cut. So, okay. Where's the screen on there? Oh, yeah. Hey, you just go to the Discover tab and then you go to the Insights and then you can see all the Pelosi trackers. So PAC is in a super investor stock portfolio. Yeah, hey, PAC, actually, I think they're in the Soros portfolio. If we go to Soros Holdings down here, yeah, look at this. PAC, yeah, that's the one you're talking about. Look at that. PAC is 8.7% of the Soros Holdings. So yeah. Howdy. Hey, what up, Sum? How's it going, man? Howdy. So, let's see here. Looks good, brother. Hey, what up, Norms? Good to see you. What's this one? Cat has done amazing for me. Yo, congratulations, Looney. You must be a very happy shareholder. Yes, sir. Andy said, I have Robinhood and I love Robinhood. Yes, sir. But I just think the reason I do all my analysis on this app right here is because it has all the best features. And there's so many features that I haven't even, I don't even go over because it would just take too long. Like there's so many weird like features like the trend projection where it takes other companies with similar chart patterns and you can compare it. And then there's also down here, you can do the versus compare feature where we can compare like Lululemon. Let's compare Lululemon to Nike. Oh yeah, it recommends other stocks in the industry that you would compare it to. Let's see here. We can do on as well. We'll do Hoka as well. Let's see. Let's compare all three of these businesses. So here's the market cap difference. So, there's so many ways you can do it. So here's the different EPS or, well, actually maybe a little better, which is two different companies. Anyway, you could basically just compare other stocks, like the different gross margins of different companies. I sometimes do that. All right. So yeah, hey, again, by the way, this is it's if you want to get this app, it's in the link tree in my bio, first link there. So here's Lululemon. This is a company just like Nike. Oh, we got to look at, AppLovin 2. What up, Lopez? Remind me to look at AppLovin 2. We got to get to that one. But yeah, Lululemon, you compare this to or actually, let me actually just put up the stocks right here. We can versus overlay compare their actual charts. We can compare Lululemon to Nike. We can compare it to Gucci stock. Let's actually compare it to Gucci stock as well. Keyring, Under Armour. Oh wait, that's 3. Yeah, basically all the apparel stocks have just been doing terribly the past couple weeks here. I mean, on the weekly chart, all these is, it's not just Lululemon exclusive. So yeah, Nike's been doing bad, and basically the growth is gone for these companies. Their margins have fallen. Let's see if there's any weekly news down here. Lululemon founder Wilson reveals 8.4% stake. Oh, hey, that's cool. Lululemon reports 21% inventory surge. Hey, that might be good, might be bad. But yeah, if we go to their comparable sales, basically their American sales are only up 1% year over year. Their main growth country in North America is only up 1% year over year. So that's not great. But the real growth is with the international numbers. The international business grew 25% year over year, but the US is only up 1. So if we combine it, the total revenue, the total sales are up 6.5, but the net income fell by 5.6. That what that means is the margins fell. Net margin fell by 11%. They're seeing increased input costs from tariffs and inflation. So, yeah, we kind of just want to see the growth come back. I don't love this name. Like I don't love apparel names. Like they just don't outperform in the long run, and they're hard doubles. Like they're so prone to like consumer changes. Oh, hey, no way. Hey, shout out to Accelerate right here again with the 14 czar. Yo, no way, Accelerate. He said PLMR. Is that the earthquake company? Yo, Ishwar, we'll try and get to EOSE after this. And Crocs, Samir, remind me to keep looking at Crocs. I want to get to Crocs. I want to get to United Rentals. We want to get to all that. So here's Polymer. This is an earthquake insurance company. I kid you not. Property and casualty insurance, but it's mainly earthquake in like California. Check out how growthy this is. Okay, I'm actually shocked, the growth here. The revenue's up 55. After it grew 44, after it grew 12, after it grew 22, like they're on a streak. I actually think they acquired a company. Let me actually double check. Yeah, well, they probably did. I mean, they spent $160 million on their cash from investing activities. Again, if this number is negative, that means they're either buying assets, buying a company, buying new land, whatever. You never want to see this positive. If this number was positive, that means they're actively selling their assets they own. So that's why if you look at Amazon spends like 20 to 30 billion a quarter. But check this out right here. The revenue's up 55%. And check this out. They're making good net income, 40 to 50 mil of net income a quarter. So, yeah. But when there's an earthquake, they're broke. Yeah. So, yeah. That's interesting. It's definitely, commercial earthquake market, the firm focuses on residential and commercial earthquake markets in earthquake-exposed states such as California, Oregon, Washington, with exposure to New Madrid seismic zone. So anyway, there's your earthquake insurance player. I've looked at them before. Sadly, I used to own them and I sold them like an idiot. So there you go. I like that company. I just like the insurance business. I like the insurance industry. I also like Progressive. Where are you located? Hey, I'm on the East Coast. I'm in the USA. By the way, it's 1:34 p.m. for me at 8 p.m. So in like 7 hours, we're going to be streaming again. So if you want to hit the follow button, by the way, we stream every day, sometimes twice a day. We'll be doing 2 streams. I sell nothing. I have no course, book, WhatsApp. I'll never follow you. I'll never DM you. Watch out for people impersonating me. So yeah. Hey, what up, Header? So makes sense. Hey, what up, Johnny? Oh, wait, Tommy said KXI. I want to get to KXI right here. So this is the iShares Global Consumer Staples ETF. So if I had to guess, there'll probably be like Procter & Gamble in here, maybe Coca-Cola, Pepsi. Let's see what it owns. So look, Walmart, Coca-Cola, Pepsi, Procter & Gamble, Philip. So actually, they probably have a nice yield, probably 2% yield or 2.5% yield. Not too shabby, I like this is and they have Nestle in here. This is an American company. This is an EU company, I believe, but you still get exposure to Nestle and Unilever. Heck yeah, dude, no way. I love this ETF actually. I love Unilever and Nestle stock. I love that ETF. That's actually great. United Rentals when you get a chance. Let's do it, Edward. Yo, my bad for that. Actually, United Rentals. Oh yeah, hey, we got to get to EOSC too. I'm so sorry. I keep forgetting all these. But yeah, if we go over here to our dividend only portfolio, one of the stocks I chose to buy is actually United Rentals. This company has impressed me so much that they're one of my holdings in here in my dividend growth portfolio. So it's a really, it's a lot of the times you'll find a lot of the boring businesses just do amazing. And United Rentals, you literally just rent stuff from them. The most popular things you rent from them are forklifts, porta potties, like random stuff like trucks, chainsaws. It's mostly businesses doing that. In this environment, it's been more favorable to rent than to just fully own and buy something right now. Just like if you just have a little, like I was just in Vegas and this whole part was fenced off with this United Rentals fence. And I'm like, hey, I'm earning money. And I drive by the street all the time and I see this like United Rentals porta potty and I'm just like, hey, I own that. So it's kind of cool. But yeah, they have a nice dividend and it grows too. It's small now, but a 0.7% yield, but the payout ratio is very good. There's so much room for future dividend growth. I'll share with you that. Oh yeah, they also just acquired Yak Mats. It's the specialty mat company where, and it's actually environmental codes like force companies to do this. So it's actually a really growthy one, but they've just acquired Yak Mats. Really cool business that was accretive to their EPS. But anyway, check this out right here. It's kind of shocking. The stock is at an all-time high. When the net income's down, it's actually because of a new tax code, right? When the, what was that called? Big Beautiful Bill passed. There was this thing where you can like instantly write off like 1 year depreciation of an asset. And that super helps United Rentals numbers for the future. But check this out. They made $622 million in net income this quarter. What is United Rentals doing with, $622 million of after-tax net income? Well, they literally, again, they pay a dividend. The dividend only cost $117 million. So they have a lot of room to raise the dividend. Since they have so much room to raise the dividend, so much leftover money, they're deploying money in share buybacks. They spent $400 million this quarter on share buybacks, 4x the dividend. Like they could afford right now to 2 to 3x the dividend. They just choose not to. They do the smart thing. They do share buybacks right now, and they're paying off debt. So everything here on United Rentals, I think, is headed in the right direction. They return money to you via share buybacks, dividends, and synergistic M&A. This has been an absolute compounding beast and a great part of my portfolio. So let's do Crocs. My fault there, Samir. Thanks for being patient with me. I feel bad for you for making you wait. My bad. So here's Crocs. I'll give you some extra in-depth analysis on them. Let's see. Crocs brand appeal. Crocs brand appeal declines in teen consumer survey. So 11,000 teenagers, Crocs is losing appeal. So anyway, that doesn't sound good. This company trades at a low PE. Let's check it out. What application is this? Yeah, hey, by the way, if you want to get this application I'm on, it's in the link tree in my bio, the first link there. It's actually a software where you buy stocks on. But one of the reasons this one is struggling is because the Hey Dude brand is shrinking. It's 16% of the revenue today. It used to be much more just because this business, it's down 4% after it fell 17, So the Hey Dude brand is declining, but if we go to the Crocs brand, this one's still growthy. So that's good. Again, single digits, but still growth. That's great. 5% there. If we go to the net income this quarter, it says they lost $500 million in net income this quarter. They didn't actually lose that. It was a little one-time adjustment because in operating profit, they actually made $310 million of operating profit. It's fell 4% year over year, but they still actually made, around that, probably $280 million in net income. So on average, this company makes, we'll call it $250 million in net income a quarter. What are they doing with all that? Well, since they don't pay a dividend, they're actually just deploying it on share buybacks. Can you explain how share buybacks help the shareholders? Great question there. Yeah. So as you can see, this company is buying back their own shares like crazy. Whenever they buy back their own shares, obviously there's less shares that exist. So it gives you more ownership in the company. So each other share gets more valuable because the net income, like the total net income of the company, which is EPS, you get more net income per share than before. So it literally makes the EPS go up. Like if the net income stays flat, the net income per share will still grow. And it gives you more ownership in the company. And since the EPS goes up artificially, it makes the PE ratio go artificially down. So it literally lowers the valuation of the company. It basically just forces the stock to go up. It's a great way to return money to shareholders. And actually, I specifically look for companies that do major share buybacks. Comfort Systems does share buybacks. Coca-Cola. This company has bought like 8% of all the shares that exist in the past year. Some of the companies I'm okay with no share buybacks. Like Amazon never does share buybacks. Amazon is in pure growth mode. They have a rule where they don't do share buybacks or they don't do dividends. That's because if you go to their cash from investing activities, they spend $27 to $30 billion a quarter buying new companies. That's how they return money to you. They're like, hey, we won't give money to you right now via dividends and share buybacks because we're in growth mode. We'll return money to you via buying companies or reinvesting in our own business, and which will make our revenue go up. Anyway, I really like shareholder-friendly companies. Well, brokerage is that. Yeah, hey, Peter, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. Yeah, it's actually in the link if you're on YouTube, it's in the link in the description. What up, Peter? And what up, Jennifer? Is there a link on your YouTube account? Yeah, my bad. I'm actually streaming on TikTok and YouTube. If you're on TikTok, it's in the link tree in my bio. If you're on YouTube, it's in the link in the description of the YouTube video. It's also, I put it in the chat there. Thanks so much, though. What is FIX? Yeah, hey, that's actually your main HVAC play. This is a heating, ventilation, air conditioning company. Yeah, they're a nice dividend growth company. But anyway, this one is another company doing share buybacks. Not much of it. Like if you go to the net income is up 72%. Here's another lesson about share buybacks. The EPS growth should always be the same as the net income growth. So the net income's up 72. The net income per share should also be up 72. But the reason it's up by 74 is because the share part of the ratio went down. So that's what's kind of cool. So anyway, that's a cool company. I wouldn't buy them here at this price. So EOSE, let's do it. So EOS Energy, and then we'll get AppLovin. Oh, yeah, hey, AppLovin for sure after this. AppLovin. So here's EOS Energy. They've had an absolute monster rally these past couple weeks here. I mean, congrats if you own this company. You know, you got to be up on your position. Let's see here. Dividends, no dividend on this company, which is all right. Product revenue. Wow, it really just spiked back up. You know, it looks like really more consistent now. What are expectations? So these next 2 months are crucial. So that might be why the stock is rallying so much, anticipating this growth. So you really want to buckle up, you know, get ready for a volatile next 6 months. Is basically as they transition from a company that does, you know, first off, it's already insane growth. Look, from 800,000 of revenue to 15 million. And then, you know, they did 15 mil of revenue. Analysts are expecting 81 mil of revenue in 2 quarters. So watch out, you know, hold it for the next 6 months and see what happens. I don't love this balance sheet, but again, the future growth expectations is why I think investors are so excited and why this is momentuming higher. That's interesting. What app is this? Yeah, hey, Inflamer. Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. Hey, by the way, it's an affiliate link to full disclosure. So if you go and deposit $100, we'll both get some free stocks. It's a brokerage, you know, it's where you buy stocks on. I think that the Friday drop was overreacting. Look for a slight recovery. I am too, but I think we're probably halfway through the dip. I think we'll probably fall another maybe 4%. Hey, and I'm ready. If you look at the middle of my screen, I got $900 of cash and ready to buy the dip. And I don't even mind holding cash because in the meantime, it earns me a 3.85% APY. So, UNH stock. You know who actually just bought UNH stock is actually the homie Warren Buffett. So if we go to Warren Buffett right here, NLR, I signed up. Hey, what up, miss? What? Let me see here. Okay, well, anyway, look right here. This is the Buffett portfolio. We can see, you know, he's a super investor. He has to make all his, you know, positions public by SEC law because he's worth over 100 million. And if we go to his newest positions, one of his new stocks he bought was UNH. He bought 5 million shares of United Healthcare. And that's why the stock rallied up so much. You know, Warren Buffett doesn't just buy any Joe Schmo stock. You know, he really does his due diligence. So that's why when it was disclosed he bought the stock, it rallied up 10% because Buffett, so she clearly sees some value in this name. So, yeah, hey, Peppa Pig, I am. What's up, Peppa Pig? So, yeah, UNH, this is your Medicare, Medicaid stock. One reason the stock tanked so much is because if they get accused of fraud, they'll get kicked out of Medicare and Medicaid for 5 years. I mean, and there is some serious allegations toward them that they probably are founding guilty of, but we'll probably just get a slap on the wrist. The punishment probably won't be as intense, but again, you know, overbilling the federal government, you know, selling people those back braces they didn't need so they could get a commission, you know, all that. So anyway, Future expectations of the net income are rough. The net income is supposed to fall another 50%. EPS is supposed to go from $5.90 to $1.70. And that $1.70 won't even be able to afford the dividend. But anyway, this is your main Medicare, Medicaid play. You get a 2.4% dividend yield. And Buffett just bought it. Honestly, I think they're worth looking into, but not at this price. I'd probably look for them, probably around that 320 at that gap, that 322 gap. I would nibble. I wouldn't make it a meaningful size position. I'd probably nibble on them. Can I hire you to run a 10-figure hedge fund? Yo, sure, Wall Street. Yeah, I'd love a job. Hey, but you wouldn't want me to do that, though. By the way, I'm not an expert. I'm in college. I'm a college student. I sell nothing. I have no course book. But hey, best way to support me, though, if you do want to, is subscribe to my YouTube channel. I'm trying to build on my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, you can just type into YouTube Nathan Robert. I'm also streaming on there. So have we discussed Amazon yet? We have, but we haven't looked at them since the beginning of the stream, so we can talk about Amazon. Amazon, this is like an ETF in one. I mean, they're an e-commerce play, an AWS play, a grocery store play, robotics play, subscription, advertising, robotics. I mean, satellite play. I mean, this is like an ETF in one. Literally, if you didn't know, the most valuable part of Amazon is actually the AWS cloud business, and it's over $100 billion of annual revenue for them. It's their highest margin business. They're not making too much money delivering you that package overnight in one day, super low single digit margin. But AWS, their cloud services, they're high margin, $107 billion of annual revenue for them. They print money. I mean, they're making 15 to 20 bill of net income a quarter. I'm totally biased. I own them, but I own them for a reason. This is a must own stock, I think. And if you're like me and have the intention to never sell, it's worth nibbling on and buying even right now. Even right here. Oh, let's do AppLovin. So this is another great stock. They actually just got added into the S&P 500. But if you're wondering what happened on this day, why did the stock gap down? It's actually an investigation from the SEC. Their ads are so profitable and so good that the SEC is investigating them right now. So I can't, their numbers are so good. I kid you not. I want to own this company because I can't believe how good their numbers are. Check this out. If we go to the revenue, the sales are up 77%. Out of the 1.26 billion of total revenue, 820 million of it was after-tax net income. If someone said, what time are you streaming later? Hey, I'm streaming at 8 p.m. Eastern time. So pretty much in exactly 6 hours and 20 minutes, I'll be streaming from now. So yeah, this net income is crazy. 820 million in net income. That means their net margin. This isn't some one-time adjustment either. This was real profit they made. Like you could tell by the operating profit, they really made 820 million net income. They really had a 65% net margin. You go spend $100 on this company with ads or $100 with this company, $65 of it for them is after-tax net income. It's insane. And not just net income, they're making also FCF, which stands for free cash flow, insane growth, up 69%. So AppLovin totally deserves to be in the S&P 500 and totally deserves this huge momentum. A great never sell stock, but the valuation is too high. Which app is this? Hey, what up, user dot? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is a brokerage where you buy stocks on. How many shares of app do you have? I actually do not own any AppLovin. I don't even know if he was talking to me, but I'd love to own AppLovin, but I don't own any. Hey, what up, David? Monday will be green. I sure hope so. We'll actually be able to tell at 8 p.m. on our stream at 8 p.m. Has all your portfolios beat inflation? You beat inflation, yes. Beat the S&P 500, no. Meta is cheap. Buy now. Hey, I agree. Meta, again, if you don't trade this and just want to never sell it, it's worth it to buy now, nibble now, just like Amazon. Let's say if you don't own the S&P 500 or the QQQ or the NASDAQ 100, you got to own these stocks individually because these are great never sells. Their daily active users are 3.48 billion. Meta, Instagram, Facebook, WhatsApp, even Threads. Threads now has the same amount of daily active users as X does. It's crazy. And it kind of shows in their net income right here. They're printing net income, 15 to 20 bill in net income a quarter. This is a $2 trillion company with 40% net margins. Another advertising company, kind of like AppLovin, where insane net margins. You spend $100 with this company, $40 of it is after-tax net income for them. Meta's kind of losing on AI, but they're buying their way into it. Like they just bought half of Scale AI for $15 billion. They bought just some AI audio startup. They bought 3% of Ray-Ban stock. Has anyone seen the new Meta Ray-Bans, Meta Oakley things? Those are pretty cool. So yeah, Meta actually now owns 3% of this stock right here. And this is a huge company. This is a $145 billion company, and 3% of it is now owned by Meta. And this is the company that owns Ray-Bans and Oakley. Can we look at APLD? What up, Master Splinter? I'll be back on stream later. Hey, see you later, Tom. Wait, Eric, can we look at Marvel before I go? Yeah, I got you, Tom. For you, I got you. Marvel stock. Hey, by the way, we're only going to be streaming. Oh, I got to go in 8 minutes. So in exactly 8 minutes, I got to go. Yeah, we've been streaming for 2 hours and 20 minutes. By the way, we'll be streaming later today. By the way, we stream every Sunday this exact same time. So let's keep going here. Should we go live as soon as the market opens? Yeah, Jeremiah, right at 8 p.m. as the market opens on the overnight market. Yes, sir. Isn't it will be bad now on Monday? I guess we'll find out. Usually the crypto tells us how tech is going to open. So here's Marvel Technologies. This is one of the cheaper chip plays. And next quarter is what you're really watching. If we go to the EPS, which is net income projections, net income per share was 22 cents. Next quarter, it's expected to be $1.36. So huge growth in the next quarter at 44. This company just transitioned from a revenue-less company, burning through, not revenue-less. I meant to say net income negative not company, burning through a couple hundred mil a quarter. Now for the past couple quarters, making 200 mil a quarter. And remember, EPS is just net income per share. 194 million of net income equals 22 cents of EPS. In next quarter, analysts are expecting $1.39 and then 44 cents. So watch for the growth there on Marvel. What's the app? Yeah, hey, Kodish, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is, by the way, this is a brokerage. It's where you buy stocks on, and it's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. And a lot of people like to keep their idle cash in here. All right, APLD. Let's do APLD probably as the last one here. Maybe to squeeze in one more. But yeah, if we go to another cool thing about this app, and you can see all the super investors portfolio, like Nancy Pelosi. They have to make all their trades public by SEC law. You can follow them into their trades or whatever. But another company that has to do that is Amazon and Nvidia. And here's Nvidia's portfolio. Nvidia owns CoreWeave as their largest holding, and then they own APLD. And again, I wouldn't just buy a stock because Nvidia owns it. Always go do your own research on it. And when we go do our own research on this company, they just had, by the way, the reason they went up so much on Friday is because they reported earnings. Friday was really red, but they were up 16%. The reason they're up 16% is, check this out. Analysts expected 45 mil of revenue. The orange line is what the analysts expect. And they reported 64 million, a huge beat, a huge gap up. Data center hosting company. No wonder. And if we go to the EPS, which is net income expectations, they beat double on that. And that too. Okay, DM'd you, hit me back when you get a chance. Hey, thanks, Wall Street. I appreciate that, man. I'll definitely check that out later. Yeah, that's the reason I think APLD had gapped up so much, is because they had a huge beat on earnings. So yeah. Congrats if you held your way. Hey, shout out to the homie Johnny, the member Johnny. He says, I'm up 60% on APLD. Heck yeah, Johnny. That's amazing. TKO. Yo, that's another really cool company, actually. That is the stock that owns the UFC and what's the other company? The WWE. Oh my goodness. TikTok says I'm AFK. All right. I just had to fill out a CAPTCHA. But we're back. But yeah, TKO, this is a very unique stock. They actually get a lot of licensing revenue. Hey, we'll try to get to FTHM after this. They actually collect a lot of licensing revenue, giving companies the rights to stream this, like their WWE. And so they own the WWE and they own the UFC. So that's really interesting. And they're making net income every quarter. Check that out. A new record net income, 270 million net income. And that was real, not some one-time adjustment either. So they're actually a very profitable company. I actually like them. They pay a dividend, a 0.4% dividend. What time are you streaming later? Hey, I'm streaming in exactly 6 hours. Yeah, at 8 p.m. It's currently 1:53 for me. I'll be streaming at 8 p.m. So, all right, let's get to this last one. FTHM, then I got to go, sadly. But yeah, FTHM, so fat. By the way, if you missed anything, I'm streaming on YouTube and you can replay it on the YouTube stream. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type in YouTube Nathan Robert. Sometimes I talk too fast. I apologize. But here's Fathom. If you look in the top right, they're only a $49 million company. So we don't normally cover these kind of stocks, but they're worth $49 million. And it's at an all-time low. So real estate brokerage. The sales are up 39% year over year, but let's see. Why are they? Oh, but they're burning through net income. So, well, not much. They're losing 3 to 5 mil. What was the market cap again? Ooh, so let's say you buy the whole company for 49 million. So you pay 49 million. You now own this whole company. You're buying a business that lost 3.5 mil this quarter, 5.6 mil, 6 million, 8 million. That's when you're worth 50 million and you lose 5 million, that's 10% of your entire company. So I can totally understand why that's actually at an all-time low. And I think I can squeeze this one in. Nebius stock. All right, Nebius. That's another one in the Nvidia portfolio right here. If you go to the Nvidia portfolio, again, don't just buy a stock because Nvidia owns it. Go do your own research on it. And Nebius has a huge partnership right now with Microsoft. If you read number one right here, Nebius secures $17.4 billion Microsoft deal for data centers. It's crazy. So if we go to the revenue right here, first off, I love this. Extremely growthy. Revenue went from 14 mil to 100 million. 100 million this quarter. Analysts are expecting in 2 quarters, 265 million. It's just going to continue to hit a new record. So it's just a really growthy company. It's probably definitely overvalued right here. And in the long run, I think they are going to hold the bag at the high maintenance data center. But the deal with Microsoft is great. Like that was game changing. And Nvidia owns them too. Pretty interesting. So anyway, that was the stream. I hope you guys have a great rest of your day. Yeah, you talk too fast, giving me my bad there. Are you a full-time trader? No. If anything, I don't even trade. I'm really just I just buy and hold stocks. Like this account specifically, I just buy and never sell stocks in here. Actually, to end the stream, I'll give you a quick portfolio update. So I have 3 different portfolios here. I definitely have too many brokerages, but check this out. This right here is our Robinhood account. This is our dividend-only portfolio where every stock in here pays a dividend. McDonald's, some of these are mostly growth stocks like Meta, Google, but they still pay dividends. And here's our total percent change on every stock in here. Luckily, we're green on every stock except for Carlisle. We're year to date, this is why I'm not selling. I remember the tariff, the reason the market dipped in April was because of tariffs. We were down 13% year to date, but now we're up 13%. So again, what I wouldn't do is sell out. I definitely wouldn't sell out of stocks, especially as the market goes down. What I would do is I would maybe go a little bit more cash heavy. Instead of trimming your positions, instead of selling out of your positions, every month as you invest more money and to have more money to invest, just deposit less and keep a little bit more in cash. So that's what I'm doing right now. And sometimes a lot of my biggest regrets are actually selling out of great companies for a profit. Like Robinhood, check this out right here. We sold 50 shares at $36. It made sense at the time. Like we were buying the stock at $8, $9, $11, and I sold it at $36 because I was down for 2 years, a huge chunk on Robinhood. And when I finally was up 300%, I'm like, all right, I'll just sell most of my position. But boy, was that a mistake. I sold it all at $36. I bought it at 13, sold it at 36, and now it's 139. But luckily we still have some shares left. Same with SoFi. Every share I've ever sold a SoFi. Here's this portfolio. We're only up 17% all time in here. How are we doing year to date, actually? Year to date, we're up 26%. Hey, we got some dividends in here. I love being fully transparent. I go to a bunch of other streams and TikTok and YouTube ones, and no one really ever shares their entire portfolio, like their lifetime performance, all their dividend income. Like I really just try to be fully transparent. So yeah, and I have some losers in here that you can't even see. Like I sold out a charge point for like a $2,000 loss. Like we have some losers in here. So yeah, that was the entire portfolio. Anyway, hope you have a great rest of your day. Watch out for people impersonating me. Just know I'll never follow you. I'll never DM you. I don't sell anything. Like I have no course, book, Telegram, WhatsApp. I have no personal one-on-one coaching. I'll never manage your assets for you. I don't do any of that. So please watch out for people impersonating me. Have a great rest of your day. Again, best way to follow or best way to support me if you do want to support me. This would mean more to me than donating $1. Just subscribe to my YouTube channel. I'm trying to build it up. My YouTube channel is called Nathan Roberts, and the link tree in my bio. I have 220 viewers on TikTok and 50 on YouTube. So I'd appreciate it if you guys. Anyway, have a great rest of your day and hit the follow button. We'll be streaming in 6 hours exactly. Thank you. Hey, shout out to everyone on the YouTube stream. Hey, see you later, Johnny. I'm Dumbmost, Jeremiah, Lynn, Austin, Philly Cheesesteak. Hey, what up? See you later. And Johnny9, thanks for being here. Prime Investing and Celebrate for all the donations, man. Shout out to Celebrate, Maddie, Looney Zone, all the members. Rocky. I don't know who's also in here. Unboxing. I'll see you.